All right. Good morning. Good afternoon. Good evening,
Morning,
wherever
everyone.
you are in the world. Look who's with me. Dirk, you've got a good set of hair today. How's it going, Dirk? Looks like
That's
you're
it.
taking a break from trading and all your hair grew back.
Yeah, I sold out my Bitcoin and now I'm just a fixed trader.
All right, everyone, welcome to today's live stream. It's me and Pedro here. Dirk is traveling. Apparently, he sold some Bitcoin and now he's going to the French Riviera, and he'll be back tomorrow. So you're gonna bear with me and Pedro here today, but I do think that we can be both entertaining and probably also give you some education. Well, less education and more entertaining. Entertaining is what I'm thinking. Let us know, guys. Are you trading anything today? You know, looking at NAS here. I see a possible trade right off the bat here. Oh, that's right. That is right. I have some
There is
slightly
a
concerning news about my account. So,
exactly.
I'm sure you all know about Victor, you know? We have he's a frequent visitor of our live stream, Victor the Mask Trader. He had a wonderful idea, and that idea was he told me, "Jonatan, you should use the hotkeys in MetaTrader. You should set up some hotkeys with the position sizer in MetaTrader." I'm like, "Oh, that sounds like a wonderful idea. Let's do that. And also, let's set it up with my Stream Deck." So I went in, I started, looking it up. How can I set up the hotkeys in MetaTrader, and how can I connect that to Stream Deck? And I found a solution. And then the position size calculator has a really good option.
Mhm.
Hamid is onto something here. I would say you're onto something. I don't know if you can read my mind, or you can perhaps it's the clown hair. But okay, so I started setting up the hotkeys, right? And I said, this is a great idea. Let's put it on Stream Deck. And then so I have one button on Stream Deck where if I press it, I kind of lock the computer, right? So when I walk out the office, I press that button and I lock the computer. So I set up all the hotkeys. It worked great, and obviously I didn't press the confirmation window. So whenever you open a position, it's like a confirmation window. Do you want to enter a trade? And
Yes,
I
exactly.
removed that. So I pressed the button where I closed down the computer, and I left my office. I believe I was gonna go and take a shower or something, and I came back and I saw that, wait a minute, I'm in a trade. I'm in a trade. How's that possible? And so I closed that trade, and you know what? I closed the trade $5 away from my daily loss limit. So what I did was
Ooh.
I pressed the key that locked the computer, and unknowingly I selected that key for my trade execution hotkey in MetaTrader. And I thought it was the one to the left of it, but it wasn't, obviously. So I locked the computer and at the same time opened the trade. So I didn't see that the trade was opening. And then, I was gone for maybe a couple of hours. I don't know. Got back and yeah. So I'm in a big drawdown. And not like it's a small drawdown. I'm almost lost the account there. But that's no problem, because now what we can do is we can start a new experiment. We can start an experiment that we did last time. Watch
Recovery.
me get out of a drawdown live.
Exactly.
Now that also has its benefits, It's and you know what? I wasn't even frustrated when I saw that. I'm like, this is just stupid, That I
Yeah.
like, this is just a terrible thing to do, and I can't believe that I was, yeah, Lisa, I'm also a clicker, and I will remain a clicker for the rest of my life. And I will send an
I,
invoice to Victor.
I do use hotkeys on position sizer, but I do use the confirmation window just to make sure
Yeah.
that I actually am going to execute the trade, and I'm not
So
pressing any button
this
mistakes.
was the winner of an account. Last week we had a giveaway. So the guy in the office that I usually message that takes care of the giveaways, he's apparently away. I don't know if he went to the Friends Riviera with Dirk as well, but he's not there. And I'm gonna see if I can get someone else to get that done. So you're gonna get your account. You're gonna get it emailed, most likely, hopefully today, or at least this week. But keep me updated. You come in here, have a live stream. Keep me updated. If you haven't have the account, then we'll take care of it. We'll take care of it. Everyone that wins will get their prizes. Okay.
Perfect. So Nasdaq is going to be our first go-to now that we found out that we don't pay any commissions on it.
Yeah, NAS is the go-to. Well, I like gold as well, and EU just because it's a very good spread, and it's just such a highly liquid market. So I like looking at those as well. But the thing is, with no commissions on the indices, it's just why pay commissions? Why pay commissions when I don't have to? Now, I am looking at Nasdaq. It looks like my idea got front ran here. You see, got the low here, got the high. I'm adding the fib here. And we actually do say that this area here, that's the reload zone. I can add this one right here so you can see the numbers. But that's basically, that's the reload zone. Now, this level, obviously, that would have been like the perfect retest level. But now that we're building structure up here, I'm not liking it. And this is on the 1 minute, right? So maybe, one idea could be something like this, where we kind of, buy the low time frame breakout, but it's on the 1 minute, and we're talking about like a $6 move. Like, yeah, I can make money on that, but it's such a tiny, tiny move. I think it's better not to touch it. But I've done some back testing. I've done some back testing over the weekend and this morning, and I'm not going to give it all away. Okay, I'm not going to give it all away because obviously I think there's some incredible edge in the system I'm testing. And when you find something where there's like very promising results, obviously you want to keep it to yourself because maybe I'll share it, but it's kind of like very, very good. But I'll give you a hint. Trade based on the first 15-minute candle close on the New York Open. So we can go back. We can look at the on Monday. New York Open was Monday. New York Open was okay. We go to the 15 minutes. I believe New York Open was Monday. No, New York Open has not been today, so I can't do that. Friday. New York Open is right here. Okay, that's New York Open. We got New York Open on, I believe it was this candle, right? Yeah.
It's at 1:30,
right?
Your time.
No, 2:30.
Yeah, no, it's 1:30. I think your time, my time is 1:30. Your time may be
2:30.
2:30. Yeah.
Yeah, that's right. This one right here. So this 50-minute candle closed on, which is 2:30 my time, and I believe that is when the because 2:30 and then it's 3:30. Yeah. So the first 50-minute candle after the close or after the open of the New York session is this one right here. Okay. So the idea is to close, to open a trade in the direction of the 15-minute candle. So if the first 15-minute candle is bullish, you go long. If the first 15-minute candle is bearish, you go short. Now, try this out, and you'll see that it's surprisingly good results. Now, there's some minor tweaks to do with it, but I've tested this now. I believe I have 50 trades. I'm going to test 150 before I have good numbers across different years. But right now I've tested around 50 trades and the results are incredible. So remember this when New York Open comes along today at 2:30 my time, 1:30 GMT, I believe. And see what if you can trade in the direction of the 15-minute candle close. And I think you have, I think there's some serious edge in there.
The question
Relying
then
on
goes
continuation of
into
news. No, nothing like that.
the question then goes into where do you actually place your stop loss and your target? Like, is there enough risk reward or not in terms of your
I'm not gonna tell you. I'm not gonna tell. That's a secret. Until
okay,
I
that's a
have
secret.
definite
Okay, perfect.
until I have definite proof of this working, then I'm not gonna spill the beans, so to say. I'm not gonna give all the edge. But that little thing, if you know technical analysis and you know system building and backtesting, then you should be able to find the most optimal stop loss placement
Perfect.
and risk to reward ratio. It has a very, very high win rate, and with certain risk to reward levels, it has an insane high win rate. Now it's a little bit too early to tell. Maybe we have it quite. This I've tested it this month, and I had like 80% win rate, and like 90% of the trades went to one risk to reward, which is like really, really high. But the thing is, this month we've had this whole year actually we've had a lot of back and forth with tariffs and news and Trump. So the New York Open might be affected what has happened the day before or things like that in the. So I believe. Yeah, I believe there might be. I mean, you can look at this for example. This is the first 15-minute candle. So like, it's a big move. You go long on that one. You would have been able to get a pretty big move. So yeah.
Yeah.
Okay, what are we looking at today, guys? What are we trading? What are you trading, Pedro?
I'm actually paying attention as well to the indices a little bit, just in the sense because we opened with a gap today. I'm trying to see, at least on my data, there is a gap in here on my server, and I'm trying to see if we are going to be closing the gap or now. So I may look for the indices to go slightly higher, just a little bit more until potentially there is a short to aim for the gaps, or even just to aim to this previous support resistance that we just broke from last week. So, but I'll prefer to see price going slightly higher because there is a gap in there, so it would be nice maybe to fill it as a short. But actually, with this move to the upside, I'm actually a bit more bullish, to be honest, at this point. So I do have this gap in here. I don't know if everyone else has it or not. I think even on MT5 as well, we may have it. So yeah, to see if we're going to feel that or not. But to be honest, with this slightly broke to the upside and the momentum that we had on Friday and with the gap to the upside, this could actually be a little bit more bullish. So it will be more of which of an intraday trade just to close gap or at least to test this previous level support resistance. So if price would go a little bit higher just to give me a little bit more of risk reward into here, then maybe look for something just to test in here or test in there, and that would be it. So basically try to trade this as a short. That would be the idea. We had a little bit of volatility in the euro as well already today with the news. We had PMI manufacturing and services as well. So there was a little bit of volatility. I was looking for shorts last week on the pound. I managed to get a short on Friday. So last Thursday when you were here on the stream, I mentioned that I was looking to see the pound to fill this pricing here, so basically move to the downside. So I managed to get a short in there all the way towards close to this level. So that's done already. So now I'm waiting again to see what else is going to happen in here. So that we basically reached the target I was aiming for. A bit similar on the euro dollar as well. Basically got really really close to this level. So now I'm a bit more of wait and see. And I'm trying to see what kind of opportunities are going to be there, to be honest. No. Because when everything gets to...
switch.
Go ahead, sorry. Yeah, go ahead.
I'm gonna switch over to gold because I'm looking at. I know we have a lot of people looking at gold, and I do like the low that we are hitting right now. I feel like we might. I mean, we have a strong move to the downside here, and usually on what I see on we have now. I've been burned many times on gold trying to catch the bottom of a move like this. I've bought a good level, and then. It just kept falling. So what I'm going to do now is I'm going to be looking at this low here on gold, and I'm not going to be entering a trade unless I see a bottom formation. Now that might be accumulation on the 1 minute like this and a breakout, or something like this with bullish engulfing candles or whatever. But I am looking for a long on gold. I'm just going to wait for this move to basically find a bottom. And that's it. And I think it would be better for me to switch over to MetaTrader when showing this. We got MetaTrader here. You can see it. No, you can't. We will add it right here. Okay, so this is on the 1 minute right here, and I want to be able to have. Okay, so I'm gonna long this. We're gonna have TP at 30.28. Now, because I'm in such a stupidly big drawdown, I have to limit my risk substantially. I'll have to go into my dashboard on the 5ers and actually see how much left I have. Okay, so my stop out level is 9,000. I have 9,191. How much should I risk on this one? 1% is 91. Let's do, you know what? Let's do 0.5%, because why not? Okay, 0.5%. We're going to be risking 0.5% on this trade, and all we do here is we wait for some type of low to come in here. Now, you can see I'm paying attention to the ticks down here, and I'm also paying attention to the 10-second chart on TradingView. So I got TradingView here, and then I got the 1 minute here, and the tick chart. So I'm trying to get a feeling for price. I'm trying to, you know, get a feeling for when have we find a. No, Henry, that was on Friday. I made the mistake on Friday. So the daily loss limit is reset. Now it's just the account, because my daily loss limit is bigger than what my actual stop out on the account is. But I'm trying to get a feeling for price action, and I'm not really looking for anything. Like, I know what I'm looking at, and you know, if we look at MetaTrader here, for example, you have accumulation range right here, and then you have that breakout. If we get accumulation range right there, like this, and a breakout, well, then I will take that trade. Same thing up here. We have a distribution range here. Now, I'm not sure if we can call it accumulation ranges and distribution ranges on the 1 minute, but that's what I call it, because that's basically what it is. But obviously, you can't really look at a 1 minute chart and say, like, there's massive distribution and there's massive accumulation, because no one really cares about what happens on the 1 minute. You know, it's like, it's not that institutions are like, oh, look at gold, it's creating a, you know, accumulation range on the 1 minute. No one cares about that. It's only us. It's only us that cares about this, right? But we can call it a range. We can call it an accumulation range. We can call it a distribution range, as long as we are aware that no one's accumulating gold here.
The tick chart looks like my heartbeat, man. It's just moving like that. When you have it so in the horizontal shape, yeah, I can't really get much information. I would prefer to have the tick chart a bit more vertical, kind of I don't know, 16 by 9 or something like that.
Yeah. So what I do is if I need to pay attention to the tick chart, I move it up like this, and now I can see the and what we see here is we do have a change in. We do see that bullish momentum coming in, and we are also seeing that on the 1 minute we have a possible change of structure here. Now, when I look at the 10-second chart on TradingView, we don't really have that change of structure, but we are about to potentially break. And the area that I'm looking to break is this one right here. That will be my entry signal if we get above, and then my stop loss will be right above this low. But we need a push it upside. We need to push it upside here to go along with that stop loss.
I do like to follow the 10-second chart as well. I have another platform to do that. My only concern with gold at this point is where it's reacting slightly on the left side. So we had a big push on Friday to the downside, and price got really close now. The high, today's high, basically got really close to the supply level, to the origin of that push down. So maybe that's why maybe we are finding a little bit of selling pressure right now. That's just my only concern in terms of looking for longs at this point, because price is already, it's basically touching already the supply. You can see it on 15 minutes basically.
Yeah,
that's my only concern with gold.
I'm most likely not going to wear this clown wig all day, because it is terribly uncomfortable, and I get these ideas. That was a bad idea, having to wear this, but I'm a man of my word 50% of the time, I would say.
There's some guys mentioning a few other parts: New Zealand dollar, Aussie yen.
Well, let's do a poll. Let's do a poll. Let's see if they want us to stay like this. This is good. Now it's kind of like forming a what I'm hoping to be a you know, a range here, a small little low time frame range here. I'm hoping for this to be that. Okay, so we got here. Okay, I was gonna do a poll. Okay, poll. Start a poll. Let's see. What is the poll? Let me see if I can pull everything up. Okay, we're about to break out of this. Looks good in the 1 minute. Looks good in the 1 minute. Let's see if I can get that breakout. Hopefully the break above the level isn't too big. If it's too if it's too violent, then I'm gonna miss the move. What the hell is the rainbow hair, bruv? Bruv, the rainbow hair is it's a clown wig, because I made a bet with myself. I said to the audience, I say if as long as I'm in drawdown on this account, I'm gonna wear this. And I also I was wearing this, but this is incredibly uncomfortable, so I'm not gonna be doing that. But the hair stays, until I'm in profits on this account. Okay, it's we're gonna break out here. Looking good. It should be your new look. Well, I'm the thing is, you know, I do have a woman in my life, and I'd like to stay with her, and I'm sure that she would most likely. Now, she's not going to leave me. She's just look at me. She's going to start to look at me weird if I walk around this in the house. I wonder what my neighbors are saying though, because I'm always home. I'm working from home, and they're like, "This guy is always at home. He says he's like a day trader, but now he's just walking around like a clown," you know. Last week I forgot to take it off, and I went outside. I was gonna, you know, drink some coffee in the sun. So I was sitting in my garden drinking coffee with this.
What's going on?
And I swear to God, my neighbors are gonna call the psych ward on me. But they don't know that I'm a day trader. And we do whatever we do. Whatever comes to mind. It's like we want to short gold, we short gold. They were gonna long gold though, hopefully.
Yeah. Maybe meanwhile we can maybe take a look at a few of the other pairs that these guys are mentioning in here. Someone also missing euro, dollar, silver. We can take a look at.
No, we can't take a look at anything else. Gold is going to break out. We cannot look at anything else, unless you guys want to. Let me know in the comments. Do you want me to ignore the incredible setup that we're going to get a gold by looking at something boring as euro NCD, or do you want me to look at gold? Let me know. Let me know in the comments. It's you are the boss of this live stream. 1. Motivation positive says 1. Okay, that's the wrong answer. I don't know what you're on about. Stay with gold, Kim. I love that you're always adding Kim. It's like you've been in here so long that now I know that you're Kim. But I do really appreciate the formality. I like you, Kim. Thanks for being here.
Indeed.
What is the purpose of you using a TikTok? If I'm going to be completely honest with you guys, I'm going to be completely honest with you guys. The reason I'm using a tick chart is because Saul sometimes looks at the tick chart. And that's the only reason. Oh. You know, he came on here and started scalping. He started talking about tick chart. I'm like, that's hardcore. I'm going to look at the tick chart as well. At least I'm honest. I could say like, oh, I'm trying to look at market structure changing here in the tick chart. No one cares. No one cares. But I do like how it looks. But okay, to be serious though, to be honest, I kind of try to, you know, get a feel for the market. Get a feel for the market, and looking at how the orders they come into the market. You see the flow into the market, which is I'm trying to understand what is the difference between looking at the tick chart and the candles. I do, however, see a big reason to look at the at the 10-second chart on TradingView. Okay, so I'm actually gonna go long here. I know it's a bit too early, but I'm gonna go long. Okay, there we go. I think we're gonna get a breakout. Let's go gold. Let's break out, because we do see that looking at the 10-second chart on TradingView, we have a shift in structure. We do have a shift in structure. We have a rounded bottom right here. It is just a matter of time. It is a matter of time.
It's fighting, trying to go up.
I'm definitely adding this much. Yeah, that's it. That all the cool guys do it. All the cool guys look at the tick chart. Han says, I think we'll go further down, to be honest, following another Elliott wave. Elliott wave theory combining with fair value gap and fib levels. Yeah, you might be right, but in this case, you're wrong, because we're breaking out. Okay, we're gonna get a good entry here. Get a good entry. How much are you risking per trade? Well, today I'm risking 0.5%, because I am only about 2% from losing the account, which means I can't risk more. And if I'm going to be honest, this is an evaluation account. I do trade evaluation accounts a little bit more aggressively than I would do with a funded account. Of course, I am not going to risk 1% per trade on a funded account and lose the account in a drawdown. And I do also, use fractional risk, same as Victor is talking about when he does his wonderful risk management webinars. So basically, what I do there is when I'm in a drawdown, I basically the risk per trade will be determined by the I don't know. I'm looking at this trend. I'm trying to speak while looking at the candle. Like, I am so bad at multitasking, but the risk is determined by taking my available drawdown and dividing that by my max drawdown on the strategy. So if my strategy has a max drawdown of 10, I take my available drawdown and then divide that by 10 and maybe 15 to keep a buffer, which means I'm going to be risking a very small amount per trade, but it is basically going to be impossible for me to lose the account if I have a profitable system. Unless you add hotkeys and enter trades unknowingly, then you will obviously lose the account much quicker than what you planned to do. But this is cool though. If this trade hits my TP, then we will be up another $70, and we can take that $70 and we can add it to the next trade, compounding our risk, which is a terrible idea to do when you have your personal account or a funded account, because that's a sure way to go into deep drawdown. But an evaluation account, I'm gonna risk it. And be very dynamic with my risk approach. So what we need to do now is we need to break above this low time frame structure right here, and when we do that, I will start limiting the risk. And it looks good. It looks like we're I'm going to show you on TradingView why I think you should all look at the 10-second chart when scalping, which it might sound like a joke, but it's really not. Look at the difference between what I've just showed you on MetaTrader and the 10-second chart on TradingView. The reason why I entered this trade was because of this move right here. That move right here. Look at this around the bottom. Look at the break of structure. This is beautiful stuff right here. Now we have a range up here. This is why I believe you want to make sure that you look at the second chart as well, because in there you will see the real battle between the buyers and sellers. You will see what's inside the 1 minute candle. You will see the dynamic of the bullish candle. You can, for example, have a bullish 1 minute candle, but a downtrend, a downwards trending structure on the 10-second. You're going to have 10-second candles within a 1 minute structure, and there can be weakness within a 1 minute candle. Okay, so it's I believe it's important to have a very good understanding of the fractal nature of price action when scalping. And so the idea here now is to see a break above that level, and when we have a break above that level, we're going to move our stops to below this low, right here. We currently have our stop loss here, and we're going to be moving that up with every, and I can mark out all the swing points here, because all the swing points are possible possible stop loss placement. And every time the trade breaks below a swing point, it is also a good reason to perhaps limit the risk or exit the position. Now the problem is that I have my entry here at the first swing point, so breaking below the first swing point, that means that I'm in drawdown, and I don't want to close the trade at the very first sign of drawdown. But I can use these levels as you know what? I'm gonna protect the account as much as possible on this trade. So I will actually move my stop loss to the first swing point. So I'm gonna be moving my stop loss up here on MetaTrader. This means that this is now a like $28 loss. Okay, so we're breaking out right now. We get a new swing point here. We're gonna move to trading views. You can see the execution live. There's trading views. So you now see that I have the stop loss up here. I got the stop loss here, and if we create new structure here, then I will move my stops again. Now I want to see structure in the 10-second, and I want to see a 1 minute candle closes on the 1 minute. So we have right now we're testing this level right here, and if we break above that level, then we should be good to go to move up to our TP level. So a 1 minute candle close above that level, and I will be moving my stops up. Okay, we're getting back down into the previous range. If we break this low right here, I think it's time to not get out of the trade, but definitely get ready for that stop loss to hit. If this was NASDAQ, I could have just taken some profit at the high. But then I got to pay, now I got to pay the commissions, which would just not make this trade profitable. But I'm so excited about the system I'm testing on NASDAQ. It's, I'm doing a lot of testing, back testing, because I'm working on building an algorithm. And the idea that I'm testing on NASDAQ is cool, because if it works, it's also very easy to trade from a manual point of view, and it's just once a day, which is really, really interesting.
Yeah, there is that excitement, right? Anytime you kind of see a new pattern or see a new thing that you are testing, and you kind of that's part of being a trader. It's always finding a new edge. It's always kind of expanding your playbook.
Yeah, it's like you have this treasure map. You're looking for treasure, and then when you start seeing signs of, like, you think you know where the treasure is, because that's what it is. If you find a very profitable system, then you find the treasure. You found the golden treasure. And sometimes it's like you start seeing the clues of, like, where that treasure might be buried, and you start seeing those clues in backtesting, and it's just such a wonderful feeling when you're seeing numbers like 80% win rate and positive R, like not even a negative risk to reward. That's just incredible.
It's really good. Yeah, that's amazing. Yeah, that's really good. And that's
okay. So go ahead. I feel like I'm. You know what? I'm gonna go get some coffee. Gonna go to get some water, and I'll be back in just a minute. And remember to take this off. Oh my God. Oh, look at my hair. Look at what happens to my hair when I have this on. I better off. You know what? I better just keep it on. This looks better. Okay, see you guys in a bit.
Yeah, it's okay. Thank you, Jonatan. Guys, what pairs? You guys have been mentioning a few pairs in here. What pairs do you want to be looking at? You can maybe... Yeah, I saw someone mentioning Aussie and New Zealand. So Euro Yen, Henry. So let's take a look at Euro Yen. What's your bias on Euro Yen? Just this one. What are you looking for, Henry? And for Euro Yen, I always like to look at the Yen index just to have an idea of maybe where the Yen index can react from, because I do feel that there's a strong correlation and it reacts quite nicely in here. So this is basically the next level where I'm looking for on the on the yen index to potentially find some bullish pressure, or at least some buyers, which means that you could have a bounce from here, which means that maybe, so this is basically the opposite of the yen pair. So basically, if I'm expecting maybe a little bit more of a move to downside, maybe euro yen could go slightly higher before actually finding some buying or selling pressure. One of the reasons for me to actually be a little bit bullish, it was initially that we saw this break to the upside, but price already respected kind of as a double top in there, which removes a little bit of my bullishness when I see price respecting a double top after the break of a high. Okay, I like to see break of structure and price to drop without retesting this level, without creating a double top in there, or a double bottom if you're talking in the opposite direction. But I'm going to be curious to see how price may react from here. Maybe we can start creating a little bit of structure and eventually can have something like that, or a little bit deeper into here. Even though in the bigger picture, I actually could continue to see this yen index to continue to drop. I'm not really sure if this low is going to be the last low. What I mean by that is if this low is going to be actually the one that's going to be doing this. I don't really like this structure for that. I think eventually this yen index could drop a bit more, but more of intraday, maybe we can look at that. So now looking at euro yen with this in mind. So Ari mentioned that you are short. Yeah, basically, if I'm short, it's basically the same thing. So if I'm looking for that yen index to go maybe a little bit lower, I think I would like to see this yen, euro yen to go slightly higher as well. So it makes sense a little bit based on what I'm looking at. I would like to see it going a little bit maybe higher before moving to the downside, which means that basically that would mean this yen index to go a little bit lower maybe before looking to the upside. So both of them kind of has or have an interesting structure that I'm looking for, kind of a demand zone in there, and the potential supply level in here on the euro yen. So I'll be waiting for it. I'm not going to be involved before price gets closer to that level. So that's mostly what I'm going to be aiming for in here. Henry, where did you want to short from? What level? All right, so Railboat Band, I mentioned pound yen. Ikoku pound yen must be quite similar, to be honest. Yep, it's going to be quite similar to the euro yen, which is basically also potentially getting a little bit higher. There's a difference, a small difference in here, is that actually this level managed to break this low. This low actually went slightly below the other one. However, on the pound yen, we do have kind of this break of structure in here. So this high, this top in here, actually managed to break slightly this top, and this can actually be more of a continuation at this point in here, of price pushing to the upside. So we need to have a little bit of an idea between higher time frame and what's going on in the moment, to actually decide if this makes actually sense and the odds are here or not to actually look for a bigger short, or maybe already broke structure on the left side, and maybe this is going to be just a continuation to the upside in here. So that's a little bit of what. So I could look for shorts in here, but I'm concerned that this already broke structure on the left. The price could actually just continue to go higher from here. Take profit on gold. Congrats, Jonathan.
Yep. It was a quick one. So we're $70 richer. Now we're going to take that $70 and we're going to be compounding it into a new trade. So now the question is, are we going to continue with the bullish momentum, or are we going to be shorting? Let me just quickly, before we continue, pull up here. Go ahead. So you can see here the trade was basically from the low here up to this level. Now the question is, will this bullish momentum continue, or are we going to see the same trade basically from this level down to perhaps this level, somewhere down here, maybe even down here? It's a quick move to the downside, flipping short, trading. But then we have to go out. We have to look at the high time frames to see if it makes sense to short, because I do feel like in current situations with gold, it always makes sense to long. I mean, you go out to the weekly and you zoom out. Yeah, of course it makes sense to long. This is incredibly bullish, but we want to make sure that, and then you go to the daily. Yeah, that's strong, lots of momentum. 4 hour now kind of looks like, well, we've had that retest. Okay, we've had that retest. So it's still bullish. We've had the retest. We We do have a downtrend here, but we are breaking above that trend line. Going down to the 1 hour, yes, we have a very clear, very, very clear level right here on the 1 hour. So does it make sense to short here? Not really, because this is the first retest right here. And I would say that on the lower time frames, probably multiple tests of that level right here. We go into the 15-minute. Yeah, it looks like we don't want to short this. We like this is not a good short, because the idea would be to short it down here. But I think that we might potentially be in for a breakout, because we got the fake out, one fake out here, first retest, second retest, fake out, comes down. Going to be trying for the third retest here on the 1 minute on a very compressed area. If you look at the 1 hour, it's just very compressed here, and it looks like the buyers are really fighting hard with the sellers here. And because of the commissions and the spreads, I don't think trading that move would be very profitable anyway. So what I'm looking for here is a move out above the level, and then a retest and a continuation and a bullish move here. And the target for this would be the last high on the 4 hour, which is that one. So we're going to be looking to not flip long. We're going to continue the long trade here, and we are breaking out now on the 1 minute, it looks like. So the trade that I'm looking at is basically something like this. It's a big trade. It's a 3R trade. I might have tighter stop loss or wider stop loss depending on what price action does on a retest. But what I'm going to do here is I want to take 1% risk. So instead of having 0.5% on last one, because we won about a little over 0.5% on previous one, I'm going to take that. I'm going to risk 0.5% extra. So I'm going to risk 1% on this trade. And hopefully by compounding that risk, but not risking too much, we are able to perhaps get out of drawdown sometime in this decade. There's strong momentum here to the upside. Let's go to the 10-second chart. So we do see a break and retest on the 10-second. So unless we have a range forming here, I think this is a good move right here. We do have bullish momentum to the upside. We have a 1 minute candle close above the level right now. So yeah, I think this idea is definitely something to be watching. The spread on gold is actually very good. I'm going to go over to the to MetaTrader, and you can watch the spread on gold here on the 1 minute. If you go to symbols here, the spread right now is 26. Now that's not
you cannot see your okay. It's not appearing good.
So you see here on the 1 minute, the spread on gold is it's very good. It's the difference between the green and the red lines right here. So as you can see, very, very good spreads. It says 26.
You can see it on the tick chart as well.
Yeah,
on the tick chart, you can literally see how tight it is. Yeah,
it's a tiny spread here. I mean, we can so the spreads on the 5ers is you won't get better spreads anywhere else with any other prop firm, and not with a private. Look at my hair; it's just hanging.
Yeah. I think that I like on that move now on gold is that price never broke the previous low, so you have to end up respecting it when it dropped. Basically, where you got wrong, price ended up respecting the one on the left side, which was really good. And perhaps now we can have a new high in this momentum. So let's see how price may react from around that.
Okay, we're retesting the level right here. I'm going to go to the 10-second on TradingView, see if we can hold the level. The level is holding very nicely. I'm going to be starting to potentially initiate a trade here. So we're going to go long. We have TP going to be up here. My stop loss. Okay, so where did I say that I want to have my TP? Okay, so it's going to be around 30, 34. The risk to reward of this one is 1.5, 1%. I'm going to go long here. Okay, so I'm long here now. I think this is a really good reaction to that level. You see the wick on the wick on the 1 minute right here. The 1 minute is going to close right now. So that's a good wick in 1 minute. Even though it's a bearish candle, it's still a good wick right here. And the 10 seconds shows that we've recovered that level as well. Okay, so I'm in this trade right now. I'm in with 1% risk. It's a much, much wider stop loss than what I initially wanted to do. But then looking at MetaTrader, it kind of gave me a different perspective. And I'm now going down 2 or even 3 swing areas before I want to get stopped out. So we have bullish momentum here. Obviously, we want to be riding that bullish momentum, a break above that level with structure above, and I will move my stops closer to entry. All right.
Yeah, we'll see.
What are you guys trading today? Are you trading? Hopefully, you're not copying me, but maybe you're trading gold. Maybe you're getting some inspiration from my trading here, where we're trying to just follow the natural flow of price action. And I must say though that
you guys didn't go. I think. Go ahead. Sorry.
Yeah. I mean, it's definitely Void. What's up, man? What's up, the man with the profile picture, looking good. All right, we got 275 people watching us here. Wow. Okay. Apparently you like watching me in a clown wig. Maybe you like Alex. Alex also really likes clowns. Mohammed says your strategy works in US30 as well. I have a very similar strategy on that. Yeah, this works in all markets. That's the thing. This what I'm trading here with price action works in every single tradable market because of the fact that the way that supply and demand works, the way that the horizontal levels work, we can pull up any chart and we would be able to trade any market, any tradable market out there with this very strategy. We see a trade come down to support, builds a range on support and then breaks the range highs. Well, then you go long up to the closest level above. This, however, is different. This is a continuation trade. What we did down here was a trade on support. We waited for accumulation and a break above accumulation. This is different because now we're actually going long at resistance, but it's also based on the fact that we have a strong movement on the higher time frames. We have high time frame conviction here and good levels to work with. Oh, you mean, yeah, I think the 50-minute candle, that's right. I'm only testing on NASDAQ, but I'm sure it works on US30 as well. What's the difference, though, between NASDAQ and US30? Like from a trading perspective or from a price action perspective or, I guess, volatility perspective, because that's all we care about as traders, really. What's the difference between NASDAQ and US30, Hamid? I think you're the right person to answer that because I do know you're looking at that quite a lot.
Yeah, I rarely tried the DAO. It's not that often. I looked at it every now and then, but between the 3 indices, DAO is the one that I trade the least. It's interesting that sometimes they do have, they're not that correlated as the S&P and NASDAQ, for example. So if you're looking for something different, maybe you can trade it. The moves are quite aggressive sometimes as well. Yeah, as Ahmed is saying, US30 is less volatile. That's true. Yeah, it's just the market dynamic is slightly different comparing with the other two. At least personally, the way I look at it.
Okay, let's see what Hamid says. Sorry, Pedro, I didn't listen to what you said.
It's okay.
Oh, I'm sorry, man.
Okay.
I'm sorry. Okay, so Hamid says US30 also has a positive correlation with NASDAQ. Yeah, of course. It's because it's a US indices, right? It's that they're going to move with each other. US30 is less volatile, but is it not volatility that we want? And then Shervin says US30 is definitely more volatile than NASDAQ. Okay, US30 is old money, more structure and one direction move. NASDAQ is like that misunderstood teenager that's good. Now you're talking my language. This is a wonderful explanation.
Exactly.
This is a really good explanation, actually.
Yeah. Trader Joe, that's what I'm looking a little bit. Try to see if the gap is closed. Just about the timing to look for that short, which may not still be there.
Okay, we're going to break out here. We're testing the highs. We're above the highs. I'm going to be moving my stop loss right here. And now we're just going to let this one run. Might come down, might hit my stop loss, and that's going to be then a, what's the loss on that one? Yeah, that's going to be a less than 0.5% loss, a 0.25% loss or something like that, which means I'll be still in profit on the day. This is today. Made only $60 on that one, but we got one trade, one winner. You know what? Like I trade very well in the beginning of the week, and especially the first hours of the day. And like you guys, the people that are following this live stream, I'm here 5 hours a day. I'm trading 5 hours a day on the 1 minute, and I usually make money. Like last week, we looked at Thursday, or was it Wednesday? I had a 100% win rate, like 10 trades, 100% win rate till lunch, and then after lunch, I gave it all back in like a couple of trades. And so what I'm trying to do here is like I want to be active before lunch, which is around between 12 or 1 my time, which is like in about an hour or so. I want to be very active throughout that time, and then after lunch, I want to be trading that strategy that I'm talking about on NASDAQ. And I think that can be and what I'm going to do is I'm actually going to go in and I'm going to buy I am going to buy a hypergrowth account. Which account I'm going to buy? Well, that's going to be up to you. I'm going to let you guys decide if I'm going to be buying a 5K, 10K, or 20K hypergrowth account.
Good account.
I'm not going to let you guys decide. I'm going to buy the 20K. Yeah, definitely the 20K. How much is that? Hypergrowth 20K. Wow, that's $850.
Yeah, those are the most expensive accounts.
All
and
right,
because
let's go.
you also get paid straight away, I think, after passing the first challenge. And then
okay, yeah, I'm gonna get the 20K, because that means. So what if I get funded with that one? What is how much do I have then? I gotta look at the program. It's been such a long time since I bought a, because I'm funded, like my funded account is a hypergrowth, like on the 160. But I don't get a new one because I can't get a new one, I believe. Okay, let's go to the website. Okay, let's go to the website. How much money? Okay, hypergrowth. If I buy the 20K, I will have a 40K. So the idea is to trade that new NASDAQ strategy on the hypergrowth. And I actually think I'll be able to make like 0.5% per day, which I know sounds absolutely insane, but I think I'm able to make half through my testing. In March, I would have made 1% per day in whole of March, which is just absolutely nuts with limited drawdown. Look at gold, we're breaking out. We're gonna get a little bit richer. Okay, so now price is getting close to my TP here. Now I want to zoom out and see, do I have TP in the right level, or should I use TP here? I'm gonna TP right here. Okay, I'm gonna TP right here. Oh, it's only $43. No way, I'm gonna wait. Why is the win on that one so small? I thought I risked way more. Okay, well I'm gonna move my stop loss a little bit. I'm gonna let it run. Okay, so where is the best possible TP here? It's I gotta close it here. I have to close it here. Okay, so we got about, how much do we have on that one? Okay, we're up $107 today, which means we are getting closer and closer to break even, which means I can finally take off the wig. Okay, we're gonna go in. We're gonna be buying a 40K hypergrowth account. That's the most expensive account we have, and the idea is I'm gonna be trying to trade this new strategy for you guys, and we'll see how long does it take for me to scale the hypergrowth account. Like I'm most likely not gonna get to like 4 million, but I might get. Look at that TP. Wasn't that just perfect? Look at that.
Yep.
Wow. Yes. We get out at the very, very high. So now it's a perfect time to take a break, from trading for me, because now I've taken 2 very good trades, and I don't think we're gonna get many more trades like that one today, because this structure is, I don't know. We have to wait. Henry says maybe try your new strategy on a cheaper account. Dude, you sound like my mom. I like my mom. We're gonna go to the most expensive one. We're gonna be spending money. I just made $200 on gold. I'm gonna be spending that. Spending that demo money. Okay, let's go.
Spending the drawdown money. So,
what I found, the best thing for me is whenever I get an idea to buy something, I must do it immediately. Otherwise, I'll start thinking in terms like, what if this is a bad idea? What if you can use the money to buy something else? What if maybe you should save the money? Maybe you should invest the money in S&P 500 and make 15% a year. I say no to that. I say buy whatever comes to mind. The first thing that you want is most likely the best thing for you. Therefore, we are buying. And I am now $850. Okay, purchase now.
Yep.
Yes. Okay, I am now $850 less wealthier.
It's an investment.
It is an investment. It's an investment in myself and also in the 5ers, I guess, but mostly in myself. Okay, let's go. Let's go. If I lose this, now it's serious, because I bought the account that I'm trading right now. I bought it for $79, but the hyper growth account now it's serious, Like now I've invested proper money. Like it's not like $800. That's a decent amount of money for me. Like I'm not a wealthy person, So now I'm invested in this account. Like I can't lose this account. Like that's it's money.
Exactly.
I know that my fiance watches this live stream, and it's like I really hope. Like I know she's probably working now or something, and she's probably not watching. But the amount of money that I'm throwing around, I'm not going to talk about that. It probably it's not something I should talk about.
Yeah.
I got my company cards. Like buy this. We buy a little bit of that as well. My accountant is like, "Are you sure this is something that you use in your company?" Yes, of course.
And Amazon, one quick purchase, like just swipe right, and just
a couple of months ago, my bank called me. They locked all my bank cards, and they called me like, "We have suspicious activity on your cards." I'm like, no, that's just me. That's just me. So we got all these weird purchases from Amazon. Like they're just coming in. It's like, yeah, I know, I got a problem. I'll lock my cards, man. It's better. I'm better. I'm better now, though. It's better now. I'm a recovering Amazon addict. But you know what? Like you get those payouts. You get those payouts from trading. It's like some days it's just everything just goes so well. It's almost like it's free money. It's like you're just able to grab money from the markets. It's ridiculous. So yeah, guys. If you get funded and you start making a good amount of money and you see that you're just able to take up money from the markets, so be careful. Maybe like if you start making big money, like it's probably good to like have a call with a financial advisor, and like start investing that money, because it's so easy to just get rid of it all.
Yeah, we kind of talked about that last week as well. Yeah, we talked about that in the sense that, especially if you are not used to have that kind of money, and if your standards or your what you are used to, it's lower. So anything that is extra, you're just going to spend it. You don't even care about it. because that's kind of your norm. So you need to adapt. You need your identity needs to start adapting and evolving with the payouts and with the amount of money that you're starting to make with the prop firms. They have a plan.
Okay, I'm gonna pull up your screen here because I'm gonna log into my Hypergrowth account here, and I'm not sure if I'm showing any personal
details.
Henry, you're very smart. Again, you sound like my mother. But yeah, it's a very good idea to keep money on the side for the taxes. Dude, the taxes is, wow, so much taxes. It's not, it's a joke, man. It's a joke. Like I pay 50% taxes. I just took out my salary today. I send a certain amount to my personal bank account and the same amount goes directly to taxes. It's like, why? It's like, well, then I know why, but it's like, it's insane. And then I pay taxes, and then I take out the money that I've already paid taxes on. I go to the store and I pay stuff that's taxable, and they're going to be taxed on that as well. And then it's like I got to pay taxes on the taxes that I already paid taxes on with money that's already taxed. It's like, wow, it's like
it keeps going. It's a loop of taxes.
Wouldn't it just be better to put a 15% flat tax on all salary? That's it. No more. That's it. Like, do they have to tax everything?
In the different phases as well. Someone mentioned Bitcoin. I think someone before, I don't remember who mentioned it, but someone was looking at Bitcoin. What's your take on Bitcoin, by the way? Are you starting to plan to get in again, or what levels are you planning to eventually? Because you sold most of your Bitcoin at around 100K or something like that. Like that's what you mentioned, I think.
Yeah, so I think Bitcoin is definitely, this might have been the local low here. It's definitely a possibility, but we didn't really have a strong move to downside. I would love to have seen a move down to at least 70. Like 70 was the area that I want to be buying. I don't think the risk to reward is very favorable here. And also, I'm trading Bitcoin spot, so I need to go in with quite a sizable amount of money to actually make some money on Bitcoin, because I don't want to add leverage to Bitcoin, which means like if I'm gonna go in with a big chunk of money, I want to know that the risk to reward is there, and I don't want to see like when I trade Bitcoin, I want to make sure that I enter at the cycle low. And the last time we had a cycle low was 2 years ago. So now the risk to reward for me as an investor in Bitcoin is just not there. I would rather take that money, put it in a trading account, and use that account, use that money as leverage for my Forex trading and that sort of stuff. So, but the thing is, like, when Bitcoin is at the top, which I believe like it's closer to the top, that's when my trading account is bigger. But when Bitcoin and the risk market is at the lowest, then I will take out a massive part of my trading portfolio and put it into long-term investments where I can make same amount of money long term for no work at all. But now I feel like the risk, like the indices and the Bitcoin is closing a cycle high, which I would then rather have cash than be invested in the market.
I agree, and again, I do think that maybe there's more downside overall in the market. I think this is just a small low on price for tracing, but Bitcoin kind of reacting from an interesting level. If you're more into day trading, I think Bitcoin actually reacted from an interesting level. I got really close to the previous all-time high. This was around 74, and actually I like the demand where actually the low reacted from, and more on intraday. Last week. Thursday, we did manage to break a little bit above the structure. That for me is more of an engulf to the upside. I was hoping to see Bitcoin kind of getting a little bit closer to this level again to get long, but price just basically started to turn from around this level. And I'm looking for price to maybe go close to 90, and then somewhere around this level. As you can see, it has been a strong level of resistance in the past. Perhaps can be again a zone of support. But as long as price kind of is still within this level, I'm not turning completely bullish. Like if price now starts breaking above this level, then okay, then maybe we can challenge the all-time highs and we go way higher than that. But definitely today, seeing some momentum. Basically, I turned bullish a little bit since we saw this break to the upside. Unfortunately, I was looking for price to get close to one of these two levels, never got there. And now maybe you can have a continuation here, maybe retest this level and push up again here on Bitcoin. But around this level in here, it's kind of a strong level of support resistance in the past, and maybe can get close to that level. Ethereum also is now moving to the upside, so we kept respecting it. I'm still curious on Ethereum regarding to this structure. If you do actually break above, then we may go higher. Price never really managed to break any low, so price retested the demand zone and now pushing higher. So we'll see how price react from here. Ethereum, to be honest, I would like to see Ethereum getting a little bit lower. I would love to see kind of 1,600 as a level to actually push much higher. Price haven't really got there, at least just yet. So we'll see what's going to happen around this structure in here. Solana is the one that I'm actually I started to buy some Solana on spot as well, because Solana already had kind of a 60% drop. So it was kind of an interesting level nearby to these lows. So that's where I started to add some, not the full position yet, because I hope Solana still continues to move forward, but that's more of an personal account that I kind of started building a position in here. But yeah, but it's finding some bullishness as well. So overall, the lows were a good level. It was already kind of a 60% drop in 1 month and a half. It's quite aggressive. But now apparently we are finding some bullishness on the risk on assets, which goes into the crypto and also the indices. So yeah, potentially can have some continuation. Then when price may get closer to this level, we'll see what may happen in here on Solana.
Yeah, I like that. It looks like altcoins and Bitcoin has definitely put in a local low here in terms of structure. Altcoins are also finding some type of structure here, so I definitely like what I'm seeing. The problem is man, I got to pick a market. I can't trade all markets out there, and right now, trading gold on a lower time frames. Imagine if I would be trading altcoins as well on the same time. That would be terrible idea. I'm gonna go long on gold here soon. By the way, I'm gonna be risking 1%, which means I will be risking most of the profits that I've made today. Let me go over what I'm looking at on the gold trade. So you can see now that we've had a good spike to the upside, coming back down. We're hitting a previous support level right here, and we are going to take the exact same trade that we did take down in that area. So let's see what we get right here. We're looking at the 1 minute, and I got the 10-second chart to the right of me right here, and basically the 10-second chart showing the same type of accumulation that we saw previously. I'm looking to TP at the last local high. As soon as we have a break above that level, I will be entering this trade. Will I risk 1%? Will I give it all back? Yes, I will. I will. No, I will. I will. I am confident in. Actually, no. I want to TP here. So this is going to be a. I need to TP right here. So this is going to be a very, very small trade. Actually, I'm not even sure if the commissions is going to make it profitable for me. Let's take a look. The 10-second is breaking out. Okay, we're long here. Let's go. Let's see. Could be a quick loss, this one. Let's see what happens. We got some momentum to the upside. Where's the TP at? Okay, 53. How much am I risking? Wow, that's a bad trade. Bad risk reward. Gonna get above that level. We need to get above that level right here. If we can get above that level, I need to secure the position. I need a lower TP as well. You know what? I'm gonna get out of this position when I'm in profit, because now looking at the spreads as well, it's a bad trade. That is a bad trade. But we'll see.
Where's the commissions, right?
Yeah, because with the spreads, it might hit that it might hit that high without me being able to take any profits anyway, and the risk to reward here is like a half an hour. On the 10-second, it looks like we had a fakeout right there, but let's see what we get. We still have that support. How much am I down? 50. How much am I risking? 92. I gotta make a decision here. On the next push up close to entry, I gotta get out of this position. This was a mistake. We're gonna be correcting that mistake. Yeah, let's put it right here. Okay, we're gonna get out of this trade as soon as possible. Okay, it's not breaking down. I'm gonna get stopped out. I'm most likely gonna get stopped out here. On the next push up, I need to get out of this position. Hopefully we can get it pushed to the upside here. Maybe. When is the candle closing? 5 seconds. Okay, we got 5 seconds. Another push to the upside. Okay, that's good. That's good.
There's a lot of, right?
Okay, we're getting out of here. Okay, so good. Okay, so we saved at least some on that loss. We're still up $45. Okay, so 5 minute, we look at that level below. So I think we're most likely going to go down and test this support. And when we do, I'll look to enter a position down in that area. Yeah, exactly. I said I'm going to trade indices because there's no commission. Let's look at the history. I'm up 40. Well, the commissions today, I haven't paid a lot of commissions actually. Actually pretty good. Only 3 trades though. Let's see what we get.
We had to last push to the upside on gold, basically where you take profit before. It got really into now the supply. So the previous high didn't really react from it, but now this last push up actually reacted from the supply on the left side. Maybe that's why we're even seeing more bearishness in here. So it's a little bit tricky. There's maybe more sellers now. So maybe if it gets closer again to your first entry, that low, maybe that will be a better level to for a potential long again, just in case that will continues to hold price up. We're getting into seller's territory, which is good.
So we have a comment saying here you have an FVG fair value gap at the red line. I assume that this is the red line. So could you explain what a fair value gap is? Because as far as I see, a fair value gap is basically just a breakout. It's basically just a candle that's breaking a level, and then there's no retest between the breakout. There's no immediate retest. And then if that's a fair value gap, then why are we not just calling it a breakout?
Yeah, but they are looking also at the weeks of the candles, if not mistaken. So basically they look at the week of the previous week and then the week of the next candle. And that's basically what I think that's where they look at fair value gap. Then of course it depends on the time frame that we're looking for. So some people may look at 5 minutes and 15 minutes, and then it changes the story of the fair value gap. But I think they look at
fair value gap is the 30-27. And what time frame is that on? 30-27. Okay, so apparently that is the fair value gap on the 5 minute. Yeah, this is the 5 minute. That is 30-27. So would be interested to know why that is. Okay, the space of the biggest bullish candle that is contained between the wicks of the candle. I don't understand that. Do you understand, Pedro?
Yeah, that's what I mean. It's basically so we have that big impulse to the upside, that big candle that you just mentioned before. But then the next candle, the candle before that, most likely are going to see some wicks in there. Like the previous one is going to be the highest wick, and the next one is going to be the lowest wick. Yeah, so this, I think, is a gap between those two, basically between those two
wicks, right?
levels. Yeah, I cannot even see yours because it's maybe too dark. But yes,
okay,
I think so.
Okay, so if I do like this, if I zoom in, then you have
Yeah,
one
there you
wick
go. You
here,
can see it. Yeah,
then one wick
something
here.
like that. Yeah, I think that's the gap in there.
Okay, so it's like this is the fair value gap.
Yeah, I would say yes. Exactly. I reconfirm. So if Harry says yes, it's true. Basically.
Okay, so what? So okay, so the fair value gap is then the same as basically. It's base. Okay, so it's the same as a what we call a naked level or an untested level. That level is a clean, naked, untested level. But if there's a wick here, then that becomes a fair value gap. Now, why this is significant is because you might call it imbalance or whatever, but what this creates is a level that has not been tested between the break and the first retest. There's no immediate retest. So when price comes down and it's going to test that naked level, that means it's the first retest. But for this to really be the first retest, it needs to be clean on all time frames. So if you go back down to the 1 minute, we go first to the 5 minute, and then we add that level. And then we go to the 1 minute, we see that even though this is a fair value gap, it is not a not a completely naked level on all time frames. So I don't know if you guys are trading based on naked levels or fair value gap, but if you are trading fair value gap or naked levels, which seems to be the same thing, then you do not want a retest like this. This is an immediate retest. And whenever you have a retest like that, the immediate retest, the probability of the first retest being the best retest or the real retest lowers. Now I know this because I've tested this for many years, and I have a lot of statistics to back that up. If a level is untested on all time frames, including the 1 minute, then it has a much higher chance of actually having a good reaction at that level. So if you're trading fair value gaps, that's something you should be testing to test that. Yeah, and I think also like what Hamid says, everything is about context, right?
Exactly.
Context is everything. This is like, yeah, this might be a fair value gap, but does it make sense? I mean, what this is as well is you could say that this is perhaps almost an outside bar, but it doesn't matter because there's we need that context. An outside bar in the middle of a trend makes no sense. A bullish engulfing in the middle of a bullish trend has no meaning, and a fair value gap between levels, I would also argue, has no meaning. It's meaningless basically because it's just a move. Okay, so now we see gold breaking out. We took out the lows here. I did exit that trade at a loss, but at least my stop loss did not get hit. Looking at the, I think what I'm gonna do now is I'm gonna take the trade up to that level. It's now 1-to-1 R, and we'll see if we can. No, you know what? I'm trying to. No, I think I'm just trying to chase the market here. It's not a good idea. Gotta be careful.
Yeah, it's a bit in the middle, and everyone then has a name for everything that the market does, which is amazing. Yeah, context is the most important thing, regardless of the concept that you are trading or strategy that you are trading. You still need to put context, and that's where the edge is.
Yeah, it's just and you know what? It's just that I don't think there's any statistical edge in in a fair value gap. Like, I'm just going to say it. I don't think there's any statistical advantages with. I have never seen the proof of that. Like, does it matter that you have 2 wicks like this? Does that really matter? What's the statistical advantage of having that wick, the distance between these 2 wicks? Because you have a candle, price has already traded. So I want to see the statistics on this. Now I can go back and I can show you the spreadsheets where I've tested the idea of the first retest. If it's a clean level on all time frames, I can look that up. I actually have the statistics. But where is the proof that if it's also a fair value gap, it has higher probability? I'm not sure that's the case, because as someone that has studied technical analysis for many years, and I know most of the price structures and candlesticks and how the indicators work and most of the different strategies out there, I do not see any significance with the fair value gap. I don't see the reason behind it. People say that it's an imbalance, but what does that really mean? It's a breakout, right? It price breaks above a level. It's a simple breakout without a retest. So I don't think the fair value gap in of itself has any statistical advantages. The thing is, when price hits that level, it's the retest of a breakout level, then of course it's going to react, because that's basically how the market works. Fair value gaps are often formed by institutional orders that move price aggressively. The gap suggests not all orders were filled, and price may revisit. I think that's a lie. I honestly, I think you've been lied to. How? Why? I think this is a quite controversial subject, but I think that this is not true. Because how would you be able to prove this? How would you be able to prove this? Like, so you think that institutional traders, they're trading gold on the 1 minute and they're buying a big chunk of gold here, so price goes up, but because there's a wick here and there's a wick there, it's proof that not all orders gets filled. Well, then go into the futures market, look at the volume, and confirm it. You know, like I thought this shouldn't be a problem. But it's an interesting idea to try to put meaning behind price. Let's not try to put meaning behind price. Let's just find patterns. It's much easier to just find the patterns that we're looking for than test the patterns and trade whatever the statistics are telling us. I don't care if it's, institutional traders making the move or not. All I care about is there a move? What's the statistical advantage? Now, fair value gaps, they work because of the reasons that I've just talked about. It's not only is it a fair value gap, it doesn't work because it's a fair value gap. It works because it's a retest of a breakout. Now, a fair value gap needs to be a breakout, most likely to be consistently profitable, because a fair value gap within a trend without context makes no sense. It's just a move. It's like you have a bullish engulfing candle between support and resistance. What does that mean? Well, nothing. Basically nothing. It just means that the move is continuing, basically. You know what? I interviewed traders quite a lot for our YouTube channel, and I would say that 75% of the people that I interview are ICT traders, and they're pulling quite a lot of money out of the market. They are scaling their accounts, they're making money, and they're trading ICT. So to say that ICT is not profitable, that would be a lie. The reason why ICT is profitable is because ICT is technical analysis, and technical analysis is profitable. Now, it doesn't matter if you call your technical analysis system ICT or whatever. If you're trading based on technical analysis and you're trading on a system with statistics that you can prove that you're profitable, then you're going to be profitable no matter what you call that system. I think John's, you're correct here. Now, I can't say that fair value gaps does not have any statistical edge. I can't say that because I have not tested it. But what I'm saying is, I'm curious to know what is the, like, what's the edge between the wicks, you know? What's the, why does it have to be a wick here? What if you have 3 candles, just a move continuing to the upside without any wicks? Then it does not become a fair value gap, but it's still a breakout level. And I would argue that there is no difference between a breakout level and a fair value gap. So yes, they have statistical advantage, but it's because it's a breakout level. That's what I'm thinking. So you think fair value gap is creating by retailers' orders? You mean retailers can push price that aggressively instead of institutional traders? Now, well, it doesn't matter. It doesn't matter who is pushing price higher. It doesn't matter. All that matters is price is being pushed higher and it happens on high volume. Now, that could be a very large group of retail traders seeing a breakout and getting in on that breakout. That can be institutional traders. It doesn't really matter though. But if there's a breakout and then volume confirms price, then you have a move with a strong volume confirming it. That doesn't matter who creates that volume. It's still a powerful move. It's still a breakout level. I don't think fair value gaps are not created by institutions. It's just created by the dynamics of the market, the dynamics of supply and demand. Okay, that's my point on. Now I'm not. You guys know that I'm not a fan of ICT, but I am a fan of technical analysis. So an ICT, you know, he obviously trades using technical analysis, and it works. You know, the demand behind the concept though is something very, very different. But ICT works because it's technical analysis, and technical analysis works. And there's only so much things you can do with technical analysis. You have trend lines, you have horizontal levels, you have candlesticks, like you get volume, you get a couple of indicators showing price and volume in different ways. It's basically just price and volume. It's price and volume. But something I understood is, after I started working with The5ers, something I understood is that there's a hell lot of good traders out there using ICT, because I'm interviewing them on a weekly basis, and I see their account. They have big accounts. They're scaling their accounts. They're making money trading ICT. So I cannot say that ICT is not profitable, because I've seen the proof of it being profitable. So and the reason why so many.
Yeah, ICT the concept. Let's call it out with ICT the concept, not ICT the guy. But yes, the concept, many people make money out of it, but it's because as well they put their own context into whatever is teaching in there.
Yeah, definitely.
So it's with their own experience after trying and testing and doing many things. For sure, there is some adjustments that they make, and they tried. I think I never really studied ICT, but I think he has many different modules. So it's basically you can pick whatever model you want and then kind of make it your own. And eventually you're going to find your own edge across all those models, maybe mix them, I don't know. But it's the same thing with everything else. When you're looking at the charts, again, supply, demand, support, resistance, market structure, whatever it may be, gaps, finding liquidity, whatever. You can create your own. If you create your own story and you create your own understanding, and you can find a pattern in there in the system that has an edge, perfect. Context for me is still everything, because context is when you start actually evolving and you become your own edge as well in that moment. It's not just trading every single fair value gap, and that doesn't take you anywhere. But yeah, and then context can go also, maybe as you become more curious and so on, maybe can start looking even fundamentals. Maybe you can start putting fundamentals into your own approach, connecting with any ICT concepts that you want to trade. Yeah, that becomes your edge. That becomes your strategy. Perfect. Many people make money out of it.
Yeah, exactly. No, I mean it's all about it's all about context. It's all about finding the things that work for you. I've throughout the years, I've found that many things have worked for me. I see that the thing that works best for me is to be fluid, in a sense where I have, like right now, I have a couple of systems that I know quite well, and I work best is if I'm able to maybe trade a few different systems parallel to each other, be that on different accounts or the same account with different risk. But I found that me as a person, I'm not very good at sticking to just one system. I
Yeah, I
try
think
to make.
but
No, go
that's
ahead.
right. I'll say finish your thought.
I try to make trading as, as fun as possible, because I know that profitable trading is not supposed to be fun. I mean, it's fun making money, it's fun making money, but profitable trading is not supposed to be fun. It's supposed to be boring and effortless. But I find that when it gets too boring, I tend to make mistakes. I tend to look for the excitement, which is a bad habit. But I'm trying to find ways to use it as a strength. Be it developing new systems or trading that's discretionary on some accounts while sticking true to my system on the bigger accounts, right? But I try to make it fun. I try to not think of trading as needing to be boring.
That's an interesting thought, because from what you have seen, from what you have said so many times during these last months in the stream, or even a year since you are here, you mentioned many times that your natural tendency is going to be always more of a swing trader. That's where you feel more comfortable. That's where you actually feel that you trade your best. But then you have this high energy as well. Like you like to be involved, to have fun, and that's maybe where this scalping approach that you are taking right now, even though may not be at the moment maybe the best results that you are achieving, but maybe with time you may get better at that. But definitely that you can implement a strategy that can bring that personality that you have into the chart, and it's going to be the aggressiveness into scalping, being active. And then it's starting maybe to recognize, like you mentioned last week, like maybe in the morning for the first three hours of the day, that's when I trade my best. That's when maybe where my energy is at, is like I managed to stay focused and find good opportunities. And after 3 hours or after lunchtime, I just keep giving my money back. There you go. You found your edge in there. Or at least something that you can start working on and filtering.
Exactly.
Like, and that's exactly
definitely.
what again that goes into journaling, at least being aware of what you are doing, kind of reviewing a little bit your trading to find that those patterns. It's all about patterns, to be honest. And as a trader, that's exactly what you are doing. Sometimes, of course, as you start, just focus on one strategy, but eventually, it's like you have a restaurant, right? You are not going to just be serving one dish to everyone. Otherwise, it's going to be quite difficult. Like eventually, you need a starter. You need maybe the different options for the main dish, and then eventually even a dessert, right? So those are small things that you can start adding into your own trading. Small parts of small trades or strategies that you can start using. Maybe you have your main one, and maybe your swing trading. That's going to be your go-to, and maybe that's where most of your profits are coming from. But that, like, otherwise, it's going to be quite boring. Otherwise, you're going to be spending so many hours in front of the charts or doing stuff, and you're not evolving. And the market is about evolving. New trades. Someone asked me if I play guitar. Unfortunately, I don't. I wish I knew. I never really learned. Like singing and being involved with the musical instruments is not my strength, unfortunately. Dancing, maybe, even though I do struggle as well. Maybe in the right environment, maybe I can dance. But no, I don't play guitar. So
you should definitely have a dancing battle between you and Alex. Should be good. That should be
maybe
good.
One day in an event, maybe we can do that.
Yeah. Okay, guys. So, and I really like the idea of day trading. I am a swing trader. but I want to become a day trader, and I think we can change. I think I would say this month I've been able to change my like mentality when it comes to day trading, because when I started day trading, I had, when I'm swing trading, I might have one losing trade on one day, and then it's like 3, 4, 5 days later, I have another losing day or losing trade. Now with day trading, it's like can take anything between 10 and 50 trades in a day, and I don't know how many of those will be losses, right? So I'm taking loss of the loss of the loss, and in the beginning, each loss affected me in the same way as it did with swing trading. But with swing trading, I had several days to accept that loss, and now I've had to just accept every trade, like every trade for potential loser, and just not be emotionally attached to whatever I'm doing. Now, of course, when I'm going to be trading this new hypergrowth account, that's a big account. It's a big investment. I will have to be very clear with myself that I will have to have the same approach on this account that I have with the accounts I'm trading now. If I'm able to do that, then I'm just going to continue doing what I'm doing right now, because I think it's very fun. It's in a sense, even though I don't have any problem with sleeping with my positions open or having them open over the weekend, it would be quite liberating to not have them open, to be, on the weekend, not having to think about what's going to happen on over the weekend. How will my positions be affected on the Monday open? So I do understand the idea of wanting to get in and out of the market quickly and then just relax. I like that idea. And I think if I'm able to do that, my strength as a swing trader will definitely help me if I'm able to get out of the emotional attachment to the trades, which this month I'm completely calm when it comes to losing trades, and I'm able to execute on the ideas immediately, and there's no hesitation. So I feel like maybe I'm slowly getting there. Maybe I'm slowly starting to get there.
Yeah, that's a good point. I think are going to be tested again. As you mentioned, it's a small account. It didn't really cost much to get involved into his to purchase his 10K account. So maybe, as you mentioned as well, maybe that's one of the reasons why the attachment is not there, and you basically are trading like you are, and sometimes that's when the best trading comes out from you, or when you perform the best. So it's going to be interesting, like if the account would be bigger and actually is real money involved, if not caring it will be also be there or not. But that's it's part of the process.
This is a good question here. Like that's what we all want to be like, and how is this fearlessness happening? So basically, what I do is I bought the account, and I said, okay, I'm just gonna take every trade. I'm gonna take every opportunity. There's gonna be zero hesitation, and like I'm buying the account. I'm doing this, and if I think that I'm not going to be able to be emotionally calm and do it in an effortless way, then why even try? Why even try trading this account if I'm not going to be able to do it completely emotionless and just be able to say, I don't care about any of the losses. I don't care about any of the winners. I'm just going to go ahead. I'm going to take all trades. And if I'm not able to do that, then why even try to do it? So I try to tell myself, yes, I don't care about this trade. I really do not care about this trade. I'm going to take every opportunity. I'm going to follow the plan. And it comes with experience as well. I've been doing this for 8 years now. And it's like, I really try to stay confident in my abilities as a trader, and also stay confident in my ability to stay calm under pressure, and you say tell myself either you do this or you don't do this. But if you're going to do this, then do it 100%. Don't do it like, if you feel like you're too emotionally attached to your trades, then maybe don't trade. Like, there's going to be days when you can't do that, and then that's going to be the days when you're not trading, right? For me though, I'm live every Monday, Tuesday, Wednesday, and Thursday, which means even if I have days that's bad, even if I wake up and I might have a headache, or I wake up and I'm just tired and I'm not feeling well, I'm going to be trading anyway. And I'm going to be having the same approach that day as well, is take every trade. And the more you do that, the more you realize that nothing really matters. It's just you follow the system, and whatever happens, happens. And you're just going to follow the flow of whatever the market is doing. As long as you limit your risk, nothing bad should be able to happen. And just do it. Just do it.
Yeah, that's an important point in terms of if you want to become a scalper, you do need to have a strategy in terms of risk management on the daily loss. Okay, because that's going to be the threshold where maybe you are going to start becoming more emotional or affecting you. Basically, what Jonatan is saying is like his memory of the last trade is basically not there. Like, he forgets really quickly what he just did kind of 10 minutes ago or whatever. Maybe you can even remember more of the trades that he has taken today than maybe himself. Maybe he needs to kind of just go back to the history to say, oh, okay, I got one in here. Like, maybe I can remember that maybe Jonatan bought the low that you can see on the chart, but maybe it doesn't, right?
Exactly. I forget about, like, if I exit a position, that trade is gone. I don't think about that trade. That trade is not affecting me. My focus is on the next trade. Now, of course, if I make a mistake, if I know that I made a mistake, the last trade I did, that's a mistake. That's a mistake. Mm-hmm. And I managed to close it for a smaller loss than what it should have been, but that was a mistake. So I remember, okay, I know what I did wrong. I'm gonna be, just thinking a little bit about that. But that's about it,
Yeah.
So I think looking at every individual trade opportunity, and we have a comment here. Yeah, I understand. I understand what you're saying. All right, I understand what you're saying. I would also be hesitant in taking someone like me serious when wearing a clown wig, but I did promise to wear a clown wig if I were in the drawdown on this account, and here we are. Now, I do still accept that you're going to take me in all seriousness, though. Now, I'm going to try to get out of this drawdown and take this wig off. But yeah, if like, okay, I'm not gonna have this wig for all week. Like, I can't have this wig on for all week. Like, that is gonna be absolutely ridiculous. Also, we got the CEO of The5ers coming on Wednesday to do a live scalping session. Like, I think I'm not gonna wear this during that session. That would be quite ridiculous. Christian Girl says it looks great. No, I don't think it looks great. I don't like it. But we're gonna keep it on. We're gonna have it on. Very colorful. Yeah, it is colorful, but. Yeah, and now I can't take it off because look at my hair now; it's just all over the place. So I'm gonna have to keep it on for at least a while. Yeah, but I can't have the nose on because Haresh, if I have the nose on, it's just terribly uncomfortable, very uncomfortable. I can't do that. I just realized that I don't look like a clown now. I just look like I have a wig, but now I look like a clown. Maybe I should have this on so people actually understand that I am supposed to be a clown, Because otherwise people just come on here.
The big glasses as well.
And you could get some. This is my hair. Okay, you need some sunglasses to reduce the contrast. No, this is good. Okay, let's do this. Maybe I can put a little bit up like that. Oh yeah, that's good. Okay. Are we going long on gold soon?
It's slowly getting closer to those lows. Let's see if it gets there. I'm following the indices. So the indices gain momentum again. I'm trying to see when is the best time to sell it. But for now, it's just going up. Nasdaq, S&P as well. So
Right,
I'm
let's
just
look at
waiting.
the Nasdaq then. What do we have on?
Yeah, it's just moving to the upside.
Yeah. Well, there's good momentum here to the upside. We're definitely looks like we're continuing off that bottom formation that we had. In a bottom formation, like a high time frame, local bottom formation here, and it looks like we're breaking out here. And I mean, we might see continuation here to the upside. If I saw this, I would probably have bought that breakout. Let's see, are we getting close to any resistance? That's we're inside that resistance area right now, and I feel like, and we're also testing the very middle of that resistance where we have a. So I think it's too late to go long here. It's too late to go long.
Yeah. In the morning, for example, you were looking for a potential long in the morning. You didn't take it. That maybe could have been a good long.
Yeah.
Now definitely price is getting at closer to a good level. Yeah, we'll see. I'm going to be looking for a short because I'm going to be looking for price at least to retest either the previous level support resistance or even the gap. DAX just closed the gap, so DAX is one of the indices that already closed the gap. Basically, maybe missed by a pip. But the other indices, they didn't close the gap. So there's always that opportunity. We'll see if that's going to happen or not today. But I'll be paying attention to that one.
Yeah, we're doing a poll. Buy or sell Nasdaq. Check out the poll in the comment. Buy or sell Nasdaq. I want to see what you guys are. I want to see what you guys are looking at. What are you guys looking at? All right, I got a phone call. I just gonna take this phone call. I'll be back in just a minute.
Avi, you're asking about dollar CAD. We can take a look at dollar CAD. By the way, where do you want to look for longs on dollar CAD? That's maybe the first question to you. Personally, I think I'm a bit more bearish on dollar CAD. Bigger picture, you did manage to break kind of this structure in here to the downside. Then you already retested this basically left shoulders in here. We created a double top as well from that move after this move to downside. We basically already retested also these lows, but personally, I think we could continue eventually to challenge more the zone in here. If price does break, the way I'm looking at it, if price starts breaking below this level, I think it can get closer again towards to this level. So that's more of where I'm going to be expecting perhaps this dollar CAD to move towards to. So that's more or less where I'm going to be looking. He's saying that on 50 minutes extreme demand and liquidity taken in 5 minutes. So I thought we could see a bullish reaction from here. Yeah, we are reacting from this lows. To be honest with you, I don't really like all these lows in here. To be honest, I think price could move to downside or could fake out actually these lows. So I don't really like to trade when there is already kind of a triple bottom in here in alignment. But I could see that basically this is the last low created in here. If prices want to go higher, it can. But I actually like the way price has been respecting this structure to the downside. So yeah, maybe can even retest this one more time, then moving to the downside. I wouldn't risk it. It's not my favorite, so I wouldn't really risk it at this point to look for a long. Price did try to go higher, kind of got rejected straight away. Just be careful with this next level in here as well. It's basically if you want to trade from here to here, maybe there's an opportunity in there to look for. That's kind of what I'm looking for. Someone mentioned also the pound. So a pound, the way I'm looking at it, it's a bit in the middle at this point. It filled the range that I was looking, as I mentioned already. It filled the range that I was looking from last week. I did manage to get a short from here to there, so that was good. That was on Friday. But the target, like last Thursday, we talked about the pound, and you're looking, at least personally, I was looking for price eventually to fill all this. Basically all this level, and we got close to that demand zone. Basically reacted from it on Friday, and then even today already kind of reopened gapping into that level. So if price had broken these lows in here, I think I'll become a bit more bearish, and I'll potentially be looking for a short from within this level, because we actually respected the level itself in there. I will need a bit more price action, to be honest, to see how price potentially can react from here in order to look for a sell. But I'm not that convinced anymore. I would definitely have preferred to see this low being broken and then price retesting in here and then looking for a bigger short. At this point, not entirely sure. Yeah, price is still kind of within this level, so I'm going to be looking at it. I want to see how price and the pound in this particular case is going to react around this level. So that's going to be my next level of interest in here on the pound dollar. So I'm waiting for it as well. DAX, Void mentioned DAX. Let's take a look at DAX. We can look at DAX as well. What is your bias, Void? What are you looking for on this Dow Jones? What are you looking on the DAX? The way I'm looking at it, okay. So DAX, like for the last year or so, has been like breaking all-time highs on a regular basis. But now it's kind of starting to slow down a little bit. Basically, what you can see is anytime price breaks new all-time highs, it kind of found a little bit of selling pressure. Even in here, it broke slightly, but it found straight away some selling pressure. And we did manage to break below this low. So that's kind of something that I'm already aware of, that price actually managed to break below this previous low. It didn't really manage to break completely below the structure that I had in here. That's why I was not really straight away looking for a short in here, but you start seeing some weakness, okay? So that's something that I pay attention. Again, I'm more a contra-trend trader, so I do pay attention when price starts breaking lows. Doesn't mean that price will just respect the previous high and drop. That doesn't mean that, but I start seeing some weakness. This move to the downside, this could have been actually a good short. I didn't take it, unfortunately. Kind of price reacted from it kind of overnight after the FOMC, but when it did manage to break below this structure here, this could have been a good target, basically to go into this demand zone, maybe this fair value gap, whatever you want to call it. And it respected quite nicely, to be honest. It respected really nicely, and I'm going to be looking for DAX kind of to go back closer to that level. Maybe in here could have been a good long, again, close the gap and potentially could look for a long in here. Maybe that could have been something to look for. And so overall, like the initial target that I'll be looking for from the short, price already reacted from it, so there's not really much more space in here because price reacted from that level. But I'll be following when price does get back to at these highs in here. I'll be looking for potential sells, or even waiting for a new break to the upside, and then eventually kind of new structure like this to look for a short. Yeah, so Void is looking for a long. Yeah, it could make sense to play within this range. It definitely can make sense. One of the levels could have been literally on the close of the gap, maybe even the retest of this low, or then even below that. So there are maybe a few levels in here that price can react from, and that's usually when you do have ranging markets. Like if there is kind of good levels at the top, good levels at the bottom that are still kind of fresh, and price can still bounce from it. That's usually then you can start having these ranging markets in here. So that's what I'm looking for. That's a great question, Rascal. So since I'm a contra-trend trader, what do I look for to be confident in taking a reversal? When you're talking about all-time highs, that's always tricky, right? Because I do like to have information on the left side, so I like to do my analysis first in the bigger picture, try to see if there's any good level on the left that maybe can eventually see price reacting from it. When you're talking at all-time highs, and this is something that has been going on for at least a year now, especially in the US indices and gold, even though I don't like to trade gold as like at the top, okay? So across all those assets, gold is the one that I'm not going to be trading at all-time highs, but I do like to trade the US indices, Nasdaq, S&P, and DAX when price goes into all-time highs. So I'm going to be looking for weakness. Okay, what is weakness for me? Just like I described right now, weakness for me is, for example, when price finally breaks the all-time highs. One thing is if price continues with a lot of momentum. Another thing is if price starts compressing, and maybe anytime starts breaking all-time highs, it just retraces straight away. Like it starts saying you start noticing some selling pressure immediately after that. So that will be one of the signals in here. Another one is like similar to what I just mentioned. As price continues to break all-time highs, maybe already starts breaking some lows. So it shows that maybe the sellers managed to at least break some levels in here against the buyers. Like I sometimes I do look at the market kind of in a battle, kind of a battlefield where you have kind of the buyers and sellers trying to gain territory. So that's basically one territory from the sellers that they managed to gain, but maybe there's more buyers in here and prices managed to continue to move higher. So that will be another one that we can look at. And then, of course, some structure that can create liquidity or manipulation into market. For example, if price by any chance now creates a double top, that's really nice because you know that many people are going to be looking to sell within the double top, and many people are going to be looking to see the breakout for price to continue to move to the upside as soon as that double top is broken and we have a new break into all-time highs. So usually that can be a great level in here that you can actually have the opposite and price pushing lower. And there are some confirmations in here as well that you can potentially look for. For example, if price is approaching already kind of that all-time high, but already managed to break some structure on the approach, that can also start to show that price maybe price wants to look for some bearishness. So then takes all-time high, and then finally it can move into the next level, something like this. Or in this particular case, look at this structure that managed to break the previous high in here. Basically, this demand zone. So breaking that level starts open door to go further down. So that will be. So those are a few things, and you can study. You can study this top. You can study this top. You can go into the US indices. You can study also this top in here. Right? You can start studying if you want a few of the tops in here. Right? This is a great example of what I just described. You literally have. One second. Hi, Victor. Let me just finish this thought process. What am I doing? 1 second. Yeah, so basically we have all this strong structure in here, and the price action inside this level is beautiful. We have already breakout structure, we have the fake out in here, we have a confirmation here. Like all the structure in here is beautiful in terms of selling a top in there. Even before that, we already had a break of a low in here as well. Starts showing indication where price wanted to go. Okay, and then you have another breakout structure in here, right? So those are a few signs that I'm usually looking for. Eventually, that can lead into the potential short. Again, doesn't mean that I'm going to only short in here. Maybe there was opportunities even then inside in there, and so on. But those are just a few things that I'm looking for. Just to beat everything. Vitor, how are you? Good morning. I hope I managed to.
Good morning, Pedro. Everyone watching us, thank you for being here. Everyone who was joining us today, good stuff. I didn't want to interrupt you, Pedro. But you were analyzing or talking about the DAX, I understand, and some other indices as well.
Yeah, so someone asked about the DAX. So yeah, that was something that we looked for before I just mentioned that. And then someone asked me about what kind of triggers I look for as a counter trend trader that can give me the confidence that we may be getting closer to actually reversal and not a continuation. So those are basically a few points that I mentioned in there. So yeah, DAX basically, we talked about DAX because DAX is the one actually basically closed the gap created over the weekend, and Nasdaq, S&P, and so on, they haven't yet. So that's something potential short in here to close the gap. Mike, welcome.
Mike, yes, I was gonna wait for you to finish to say to welcome Mike as well. Well, we're all partners in crime, but Mike has joined us for the following hour or so, or maybe two. I don't know. It doesn't matter, but he has joined us, and for that we are grateful. How are you doing today, Mike? Ooh, what has happened? I'm flabbergasted.
I have literally nothing to say. That there is no point me even trying to say anything when Jonatan arrives looking like that.
No, absolute right.
Someone is in drawdown. Are you?
Yeah, yeah. I'm in a drawdown.
It's a very colorful drawdown.
Yeah, I get a bit tired of this this outfit. So I don't know. I might have to like. I'm not gonna wear this all day tomorrow. Like I can't do that. This is very uncomfortable for me, for different reasons. So I am in a drawdown, and I'm thinking either I go all in, either lose the account or get to break even. And it's done with this whole clown thing.
And you're
You sure about that?
You're waiting for our opinion. Which one of the two we should do? You should do?
No, I don't care. I don't care.
Victor,
I don't care about that.
Victor, since when has Jonatan ever cared about our opinion? It's like
You can think whatever you want about this clown suit. I'm gonna follow my own intuition here.
Which means all in.
Yeah, but I do value your comments though, Victor. But that's all they are, comments. No, I'm kidding. You do. I like you. I like you. Okay, I'm gonna go get some. Do you not time stop? What is it? Do you not time stop your drawdown? I don't understand the question, but no, I do not. Okay, I will go and I will get some lunch. And when I'm back, am I going to be back? Yeah, I'm going to be back a little bit later. And what do we have in store when I get back? What's happening when I get back? Oh yeah, that's right. We got Deanna. Deanna coming on. We're gonna do some live trading indices. Oh man, I'm tired. I'm gonna get some lunch.
Yeah, you do that. Get that lunch, and we'll be here waiting for you, with or without costume.
All right.
No.
See you later,
we'll
guys.
be without a costume. We'll be without a costume. You can come back with a costume.
Yeah, all right. I feel like I'm. Yeah, I do. Yeah, never mind. See you guys later.
Jonatan.
Jonatan, always colorful, right?
Yeah,
That's one way to put it. That is definitely one way to put it.
He made some money today, so it's okay. But I think he destroyed it on Friday again. He made a mistake. He started using hotkeys on position sizer, and I think he opened a trade by mistake. And he was that close to lose the account.
Yeah, I did read something. I did hear something in that in that direction. He's
been blaming you, Victor. He's been blaming you for it the whole time. He's been blaming the two.
I heard
of you.
that as well.
He said it was Victor and Pedro's fault, and I was like, how could it be Victor and Pedro's fault? They didn't press the hotkey.
It wasn't my finger.
Exactly.
But I don't understand. But there's something about he went and pressed the hotkey whilst he was going for a shower or something. I mean, who's pressing hotkeys when they're going for a shower? It doesn't make any sense.
Yeah, make sure when you select a hotkey that hotkey doesn't do anything else aside from executing a trade.
That's also a good tip. Yeah.
We're triggering him in the background. He's jumping in and jumping out on the camera. He's trying to decide whether he wants to come back in and have a go at us and try to clarify the situation, or if he's just going to let it go.
Maybe Jonatan has a waterproof keyboard.
Can you imagine? There's some visualizations that I don't need in my life, and Jonatan in the shower trading is not one of them.
Imagine.
Oh, he says he's letting it go. He's letting it go. All right, okay, he's letting it go. You know we love you, Jonatan. You know we love you. It's all for entertainment purposes. That's this is what this is all about. So yeah.
What are you guys looking today?
I have got my list of assets that I'm looking at today, based on what was the divergences at the end of last week. I even have them written down on a piece of paper. Ooh. I'm very, very organized today. I feel like a newsreader.
Wow.
So I've got 5 pairs that I'm looking at.
Mm-hmm.
Gold, because it's gold, and because we all know that you all love gold.
And the direction, can you see the direction as well?
Not sure yet.
Okay.
It's gold for me right now is too choppy. Then Aussie CHF and Euro CHF.
It's a long or short?
Again, just pairs that I'm looking at. So Aussie and Euro CHF, and then Aussie and Euro CAD. Those are my 4 pairs that I'm looking at, because they had a big divergence last week. So I'm looking to see either continuations or reversals.
What about you, Pedro? What are you looking at? Where's the opportunity according to you?
The opportunity according to me. So last week, you remember that we talked about the pound, right? We're looking for potential shorts. So basically, price filled that level that I wanted. So I think we talked about here on Thursday, then eventually price dropped, and it filled this space that I was looking for. I would have preferred to see this level here broken to the downside to give you more confidence to then short the top. But I'm still going to be looking at price action for a potential short whenever pound dollar gets closer to this level again. So that's more of, we'll see when it gets there. So I'm going to be patient with that. Today, in particular, as I mentioned already, I'm looking at US indices just to see if we do fill the gap that the market created, or at least, if not completely fill the gap, at least to go back into this previous level of support resistance in here. So maybe can go higher, and I'm going to be looking for something like this with potentially first target somewhere in here, or then potentially to close the gap. So that's mostly today. What I'm going to be looking for is for this potential move on US indices. And aside from that, honestly, I'm more of waiting to see what will happen. I can see the yen pairs. I'm going to be looking for the yen index to get closer to this level, potentially to look for long. So we did manage to break that structure. Again, as I mentioned, I don't like this about topping here. I would have preferred to see a break of structure and price just moving down without testing the level. That kind of sometimes kind of neglects the kind of the information I get from breaking a structure is kind of nulled by that double top. But I'm still curious to see how price may react from this level, which means that maybe you can look for shorts on some yen pairs. But I'm waiting to see first price getting there. Yeah, that's basically what I'm looking at this point. Then waiting to see new opportunities. What about you? What are you looking for?
I'm gonna be right back with my comments on my opportunities, but I'll be right back. It'll take about 30 seconds.
Okay. Mike, show us. He's getting the list as well. He's writing down the list on the piece of paper.
I'll just show you why I was looking at those particular currency pairs. So this was the close of last week, right? So you can see here on the strength scores. So CHF had a really good, strong week last week, and so did the CAD, whereas the euro and Aussie dollars didn't. They were very, very weak. So that's the only reason, is just that divergence on those particular currencies in terms of strength versus weakness. Doesn't necessarily mean that the CHF is going to continue to be strong. Doesn't mean that the Aussie dollar is going to continue to be weak. It's just about looking at those pairs in particular, because if you look at last week, and actually it was interesting, you were looking at GU. You were talking about positions on GU, but we look at GU. I think you had it on the 15-minute, and we look at it. It was pretty rangy. You know, there wasn't really. Do you see what I mean? So
the space in there. Yeah, I did manage to find the space within that range. That's kind of what I. But now it's closed. Now for me, it closed. Yeah. That space is closed. Yeah. So that was last week.
Yeah. So kind of my thoughts behind it are to try and see if there's a way that I can manage to use the knowledge and the experience that I've got of really tight stops and really nice entries like Victor has, but looking for pairs where the swing positions are going to be able to get you in. So in other words, looking for that, those kind of big extreme divergences, and then saying to myself, right, okay, so this one's really swung. Is it going to come back, or is it going to continue on? You know, what's the kind of the move and the momentum behind them? So as I said, like if I look at the one that I'm looking at most today is Euro CAD, which probably isn't the best one to look at, but this was a trade, and actually, this is a bad thing to do. Is I listen to Alex, and I love Alex to bits, but I listen to Alex. And I sent him the chart and I said, Alex, look at this. It's a nice break and retest. And it was on the 5-minute. And I was like, right, we've got this structure here. And then we've had this breakdown. Yes, we're coming down to this support level. I said, I can see us coming up to this area and selling off. And Alex was like, no. And I said, no, really? And he said, no, look at Euro USD. It's the same. I listened to him and I didn't take the trade. And look what's happened. The trade is going exactly as it would have done on a break and retest. It's probably going to break past these levels. We'll see. It might not, but for the break and retest idea, it would have been an entry here, stop up here, and take profit down here. would have been a really nice trade. But
and in the context of the bigger picture, you can actually go further down because when you mentioned that you want to look for that momentum, right, on the trades, and look more into the higher time frame, or is more intraday stuff that you are looking for?
So I'm looking at intraday, but the ones where there's going to be a bigger move. So if you look at, for example, one of the reasons why Euro CAD is maybe one to look at is if you look at what they've done on the 4 hour, for example, there's been a big bullish pump up.
Exactly.
Right? And is some of this going to be pulled back down? We've got a big divergence when we're so far away from the 200 EMA in particular. It gives you an indication that, wow, that was a really big pump. So they've spread out and then it will pull back in again. Question is whether it pulls back in very, very slowly. So is it just going to do a bit of a dribble like that, which is possible? Or is it going to be more of an impulsive move? That's why I look for those kind of divergences on the strengths, because they can just present you a pair that you wouldn't maybe necessarily look at otherwise. And doesn't mean you're always going to find an opportunity on them. It might be, it might be structure that doesn't look clean or clear, but they're just ones that, there was liquidity in that market, there was movement in that market. Can you trade off the back of that?
It's a good approach.
Mike, could you just repeat everything you just said? Could you repeat that? I'm just kidding. I'm just kidding.
No,
I'm just kidding. I'm just fooling around.
That was about it. It was gibberish.
So coming to your question, Pedro, where do I see opportunities in the market? I'll switch to my screen so you guys can actually have some visuals to why and how and which pair I'm looking at. From the higher time frames, right? Of course, I focus on EU and GU all the time because that's where I, earn my money. So I gotta be faithful to those pairs. But one thing that I like is that on EU, for example, right? We have been talking about this as this is price action is a never-ending story. You only add a chapter to it as you are, getting more data. So the narrative doesn't really change. It just gets updated. And sometimes it changes direction, but it's still the same, narrative, where we're coming from, where we're going to, etc. So what I try to say about that with that is that we're looking at this level because on the weekly time frame, we had an uptrend, right? An established uptrend, the break of that neckline, and we were coming back into this weekly entry order block, which is very interesting. And I remember we talked about this last week. I said this is the area where we could see some selling pressure coming in, but we just don't trade it because it's the area. We need the confirmation. Recent PA, like actual PA, needs to confirm that. And we got the first candlestick combination and a bearish engulfing on the weekly, which kinds of confirms. It doesn't mean that we're gonna go right away, as always we say, right? Price doesn't go in a straight line, but this bearish engulfing in the right place tells us yes, right? The selling pressure is coming to the market. Now it doesn't mean, as I said, it's gonna go straight down. It can still go up and perhaps use something in this newly formed order block to move down. I'm not talking about this order block, and neither the entry on the quasi, right? Not the quasi, the bigger quasi. I'm talking about this newly fresh order block, which is within that entry order block on the weekly. We could find something like that, and we could even continue to break higher. It's all possible. But the fact that we got our first indication that price indeed is slowing down, that's promising, because now we could target, if we get a reversal on the daily and the 4 hour, etc., we can potentially target something below, because if indeed this is the reversal point. There's nothing to the left, right? It's one big candle that if things get sour and starts going south, there's nothing really to stop price all the way to this structure. I don't mean to say that's going to happen, but that idea starts to getting some meat to it, right? So we'll have to be patient and wait for the reversal to happen on the daily, and perhaps this is just one sign on the weekly. Maybe there's another sign, maybe a week from now, 2 weeks from now, 3 weeks from now, and we might have more data to see if there's follow through to this structure or not, because price could just as well negate this order block by ending again this week bullish as a bullish engulfing, creating a bullish structure, negating that bearishness, and then it's off the table, right? So you got to be flexible, not to think it's going to go right away, but let the market tell us step by step. So this is the first sign. That's on EU. If we go to GU, we don't see the same. So it's only on EU. However, we are as well on GU at that area where we could see some selling pressure coming to the market. And if we go to the daily, we actually have a weekly structure being created, right? A bearish quasi on the daily, not a weekly, the daily time frame, and it is happening at that weekly area that makes sense. So based on this daily quasi, my entry order block becomes this one, right? If and when price gets to that area, I want to be looking for that short, and I'm going to be targeting, if it happens and we get H4, etc. in alignment, then I'm going to be targeting at least this to begin with, and possibly, depending on how the weekly ends and the daily, etc., I might be targeting something lower, the same way as with the EU, because it's this basically, EU and GU, they typically they're very closely, they move closely, they have high correlation a lot of the times, and we are in that weekly order block as well, entry order block. So if this reverses on the daily, it's likely to it's possible, slightly likely to create a bearish structure on the weekly time frame as well. And if it does that, then our logical place for it to target is that weekly order block below us, which is how much that is. That's about 300 pips from now. So that's certainly something I want to be on the lookout to see if it's going to happen or not. It's not in the picture yet on pound, but on euro we have the first sign of a possible reversal. It's yet sessions. It's not something for today, right? That opportunity is not for today, but maybe this week, maybe next week. But that's how you spot these opportunities. It's not that you open the chart and that's it, you see it right away. No, you see them from afar as a possibility that is getting more and more probabilities to it before you take it. So that's what I'm looking for on EU. So we have that weekly order block that I just mentioned. Now, if I go to the daily, there isn't anything yet. So I need to see the reversal on the lower time frame on the daily. This is, and that's what I'm eager to see if it's going to happen or not. To me, this is not a quasi. So price still has some more, structure, more data it needs to give us. The other thing is, as long as that, what I just mentioned is more of a swing opportunity, right? Something that might happen this week, next week, maybe even in 3 or 4 weeks from now. But in the coming days, and perhaps even today, I'm not convinced that the market has reached or tapped into a demand zone yet. So to me, like on an intraday and maybe for an overnight, I'm still bearish on EU. And the reason is that we haven't normally, if we have a reversal of any kind, you'll see some bullish structures or some structure being created, which confirms that the market has turned. That hasn't happened on EU going long yet. To me, we're probably, as long as we don't close above this close of the Friday's close today, if we don't create that bullishness it's likely that we're going to have some kind of reversal or retrace until we actually go into that order block, unless we see some reversal pattern on the lower time frame, which also is possible. And then, of course, we could be looking for price to going much higher. But so far, I'm not sold yet that price has done all it wanted to do as for the sellers. I still think we need to either create or tap it into this order block, which is below us on EU, or create a new structure here that tells us that the market is ready to go up. I don't see that yet. So I'm still bearish for the day and maybe for the coming few days, but there's an opportunity. So they're different depending on the time frame. There's different opportunities that I see in the market right now. All right, so on the H4, as I said, if we go to the lower time frame, I still expect price to go lower. However, when we go lower time frame, we do have reason. Notice this, that I have an idea of what scenarios I'm likely to be on one time frame. But when I go to a different time frame, let's say under the H4, whatever structure that I see that is fresh or part of a quasi, I take regardless of that, idea or different scenarios that I might be, pondering or considering on the higher time frame. If the higher time frame doesn't align with that H4, that means that I need to take that H4 setup, only for what it is, an H4, meaning I'm just going to go to the next H4 level and that's it, right? I'm not going to extend it as a daily target because the daily isn't aligned. So on the lower time frame, even though on the daily time frame, I expect price to perhaps needing to go lower, or as I said, create a reversal pattern, a new one, right? So not tapping into that order block on the daily time frame, but create a new reversal pattern. And I do see we are actually currently retesting this order block on the H4. And since we have two, I would, you could trade both of them. This is one, but I would be more picky and trade the next one. And if we go to the lower time frame, you will see that there is actually, no, we haven't had the reversal yet because this is the quasi. On EU, it was on GU that there is a quasi that is being created. It's actually also on the H2. As you can see, not in the H2, it isn't. It is on the H1. All right, so I'm going to leave that on. So if price hasn't reversed yet, that's another. Actually, I thought it was EU that was already forming a reversal pattern. It's not. It hasn't created the quasi, so that actually supports the daily time frame, that we're not reversing on the H4, neither on the H2 or H1, meaning it supports that idea that we're going to be probably going to going lower into some structure before changing direction or even considering doing anything else. So that's one thing. But if we go to the GU, there is a reversal structure that is being created, and that's what I was going to explain. We have two order blocks they're still fresh, and in that case, since we've already tapped into the daily, I find this to be a better opportunity than EU for that reversal. It creates the H2 quasi. It taps into the daily. The daily happened a couple of days ago, so it makes sense that we might see a push a bit higher from where we are currently. That's GU. So if I take the lowest order block and zoom in and tap into the quasi, because we do have a quasi here. That's pointed out for everyone who's wondering what a quasi is. What is that masked trader talking about? The quasi is this, right? We have an established downtrend, lower lows, lower highs, and that creates this as the neckline, right? If it wants to go higher, creating a reversal pattern, it needs to break this line, and that's exactly what it did. Doesn't mean it's going to go necessarily up, but this is how reversals are created. So it breaks the neckline and it comes back in some area of support or demand. And I can see an H4 order block there. It's not the only one, but that's the one that is the lowest. and within that area there is also an H1. So something in this area, either the order block below or in the H4, we could see that follow through coming in and completing that quasi. So that's something that I'm looking to take, and this makes sense because on the higher time frame, right, we were I would be wanting to price to get to this order block, right, in its way to that place. It needs to reverse, and it's already doing so. You can see on the H4, it's giving us bullish structures back to back. So it makes sense that, you know, it's going to continue to go a little bit higher. As we can see, something like this would make sense. Maybe this order block, maybe the one the lower. We don't know that yet. We'll have to wait for price to tell us what it wants to use to make that reversal. That it's, you know, depicting right now. It's showing us. It's not confirmed yet, but it looks, at least on the H2, it is confirmed. But on the H4, it isn't. There isn't a quasi on the H4. There's only a fresh order block. So those are the two things that I'm looking for. So different time frames and different pairs, depending on which one aligns better. All right, so let's look at the chat to see what we have.
I saw a while back we had somebody asking about USD JPY. I've had a quick look, and it's not showing me anything clear at the moment. On the 15-minute, we'd broken some previous resistance, but we've now hit the next layer up. So if I pull up my chart,
Sure.
We're kind of stuck in this range on the 15 minutes, which if you look on the 1 hour, there's just lots of wicks either side. I really want to see a break of this area, because at the moment it just feels like a bit of an accumulation. We've started off here. We've started the week at this level here. We haven't broken it. We also haven't broken the high that we've created. So it just feels like we're kind of closing in on price, potentially heading for longs. Potentially, you know, we've got this long wick that started the week. We've then on the 30-minute, we've created this engulfing candle here. So this could be a nice long entry coming soon if we have a bit of a pullback and then head on up. But I'm not sure where I would put my entry in. You know, would I go, for example, if we're saying we've broken this previous lower low, lower high, maybe coming into this area, there does appear to be a nice liquidity level in that area, where there's a wick on there. It's just tiny wick on there. But yeah, that's probably where I'd be looking. If I was going to be going long, then I'd probably be looking to go in there. But it's still a way off the 200 EMA, so it's not looking as clear cut. On the 1 hour, it looks better. We've kind of dipped down, bounced off the 200 again, and we're now pushing up again. If we take it to the daily actually started with no wick, and that's the one thing just to be cautious of, is that on the daily we have this level here that price is likely to react from. And if we look at it zooming out, we have already some really strong reactions happening on the daily in this area here. So if we take it like that, we can see that we've already come in and we've tapped into those wicks of this. This one admittedly wasn't a totally engulfing candle because it didn't take the low, but it did take the body and then shoot down. Price has come back and it's created another engulfing to the downside. There looks to be a lot of bearish momentum against the USD right now. So that's what I'm seeing on UJ at the moment. But I mean, I was saying longs when I look at it on the higher time frames. Where would I see the longs come from? Longs, where would longs come from? We've got liquidity up here. We've got this one already here as well. That's on the 30-minute. Actually, that one's been taken. So we might already be in longs, actually. Sorry, in shorts. What am I saying? Not longs, shorts.
One of the two.
Where we're just wondering maybe if we realign it as a move, if we take this as a move, that looks actually more interesting.
Guys, I'm going to head off. Yeah, I have to
no
go
worries,
now.
Pedro.
So it has been a pleasure, guys. Thank you very much for everything, for the comments as well. Anyone that speaks Portuguese, feel free to join us at 5 p.m. I think the links must be in the description to join the Portuguese channel of the 5ers. So feel free to join us there. Thank you, guys. Have a good one. Enjoy. I'll see you somewhere this week.
Thank you,
Cheers,
Pedro. I think I'm gonna learn Portuguese just to join your live stream.
Fair enough. At least you learn Portuguese,
man.
because trading wise, maybe it's not the best information. Joking.
Take care, man.
Bye bye.
Cheers, man. So yes, that's what I mean. We're talking about shorts. You're talking about shorts potentially on Euro USD, aren't you, Victor? Which goes against the bias suggesting that USD JPY would go down. So again, I keep going back to the strength scores. You know, the dollar last week, yeah, it showed some strength, but it didn't show anything significant. You know, it was the Swiss franc and the CAD that showed real strength. If we look at it on the daily, how did we finish last week? Well, the dollar showed strength at the end of the week. So therefore, are we looking at it today? Well, today, actually, it's showing not much. The only real divergence is the Aussie dollar and the pound, maybe against the JPY. Those are possibly ones that are active right now, where we're seeing some divergence coming through from those. So Aussie dollar JPY might be an interesting one, or pound JPY might also be interesting ones. USD JPY might not have the legs in it to really move. If we look at the half an hour on GJ, there's a greater divergence, I think. We've had a lot of this move. We've bounced off the 200 and we're now expanding out again. We've had this nice start of the week. So potentially a nice opportunity for some further longs. Take it out to the daily. We've reacted off these long wicks here and now pushing up. And we still have certainly more room to go to retest some of these highs maybe. So yeah, that's probably what I'd be looking for. I can't remember who it was that was asking about UJ. UJ for me is a little bit harder to call, just because the dollar isn't showing much suggestion one way or the other right now. So I'd be looking at something like GJ or maybe Aussie Japanese yen. You know, that one's possibly one. If we look on the weekly, you know, we've bounced off the 200 EMA here. We can't close below it. So maybe that's where we're going to start seeing some bullish momentum coming in. I mean, the Aussie dollar has been really, really weak for quite some time now, so it probably needs a little bit of a reprieve. So we'll see. Maybe that's one to take a look at as well, is see if there's something here on the 1 hour. Possibly still something coming in. Just trying to see. Again, yeah, we've broken up above the 200 EMA. So again, we might see something here where we've got a nice opportunity for maybe if we see a pullback, then maybe something in where would I look? Going back, possibly in this area here. So maybe somewhere around here to then take longs. That might be a nice opportunity on Aussie JPY. What do I have in front of me? M76. It is a microphone. It is a microphone, but I work in a shared office. So to try and prevent all of you guys from hearing everything that might be around me, I have this kind of muffler type thing that is meant to prevent any background noise, which I think is working.
It is working. It is working most of the time.
Most of the time.
But
The
doing a
FBI.
pretty good job, I think.
I'm glad to hear. I'm glad to hear. We seem to have the FBI in with us today, Victor, and they're quite insistent on us looking at gold.
Yes.
I don't know if that's a good thing or a bad thing. If the FBI are telling us to go and look at gold, I was pretty sure they were supposed to be going looking at Fort Knox. So I'm not sure what they're doing on the 5ers stream, but
I think they should do that audit. I think that audit is
I
overdue.
do as well.
Yeah.
do.
They should.
Yeah,
They should count all those bars. I want to know for sure if they're there.
we all do. We all do. We want to know. You know, are we getting good value for money on this? You know. Ahmed, at least that's what you think. We never know. We never know.
All right, let's look at gold.
Let's look at gold. Gold
after
is...
we look after. Okay, go ahead if you want to go.
No,
I was gonna go.
No, go for
I
it.
was gonna go. Well, before we go to gold, let's look at oil because someone asked about gold, oil as well. And we are all here to please as many as possible. We're here to, scour the charts to see for opportunities. And let's look at what we have on the higher, very, very high time frame. What do we see here, right? We have a compression, right? We had a very impulsive move. This is the monthly time frame. Yes, I know you're not going to be trading this time frame, but this is just to understand what is happening, right? It seems... right, the price has had a very impulsive move, bullish one, and we are currently still in that retrace from that bullish, bigger move that we had, a couple of years ago, but we're getting close, and this is getting exciting. As soon as when we have compression, that is typically the ebb and the flow of the market. They compress before they expand, right? That's the ebb and flow constantly the market has. So it's getting interesting. Yes, it's on the monthly time frame. It can happen anytime, maybe not even this year, but we're getting close. Those structures are being created every time closer to each other, and we need to be paying attention. So that's one thing that I wanted to show, to point out on the monthly time frame. If we go to the lower time frames, what do we have? Of course, we have actually on the monthly time frame, we do have that bullish that is fresh, and we have another one above us. So it makes sense to look if we have alignment with the weekly, with the daily, right? That price could be reacting from this bullish structure into the one above us, right? It's not the whole range. We don't expect a breakout or even the whole order block to be retested, but this makes a lot of sense, right? Because we are retesting this bullish structure. It makes sense that at least it's going to retest the opposite structure as well. So that's one thing that I want to see if we can find more arguments in that direction. The other thing that I see is that we took out, at least in this price feed, we took out some very nice liquidity, as you can see, before we changed direction, right? See that low, how we took it by only a fraction. And it means that everyone else who was waiting for that breakdown to materialize are now underwater. They realize they are on the wrong side of the market, and they have probably already gone out. And if they're still holding, they're in pain, right? So that tells us a little bit of those higher. This is the weekly, so this is the higher time frame traders. That would be not your typical day trader. All right, so we are in a monthly demand area based on those order blocks, and the next thing is, do we have any reason to go long on the weekly? Currently we don't. Okay, so there isn't that alignment, at least not yet. Maybe it's going to come later. Let's go to the daily. What do we see on the daily time frame? To me, what it did was it took out liquidity, right? It told us, by taking that liquidity, by breaking that low, it told us that the sellers are still in control in terms of market structure. That's why it's making, even if it's a very little, and you can consider it a double bottom, but the fact that it was able to take the other side, make a lower low, to me means, it tells me it opens the door for lower prices, but not necessarily right away, right? This is that's how the market moves. It gives you a sign only to act upon it later on, but in the meantime it's going to do something else. And that's exactly what it's doing. It broke down, but it's not going to continue until it does something else, right? And something else could be a push to that bearish order block on the monthly, but it might be something else. We'll have to wait for that. So that's on the daily time frame, and let's see if we have the structure. It hasn't broken any structure yet on the daily. So we don't have a quasi. Perhaps we can look for that quasi on a. We do have it on the higher time frame. If we consider this whole to be a quasi, which is right, these two, because of the small. If you consider this a very, not consider, it is a very small breakdown, only by very little. So you could consider this and watch this as the head. If you consider that to be the head, then this would be the left shoulder. And in that way of looking at, we did break actually, and you can see how nicely that order block. It is in the past, but that's how these quasi work, right? That would be the entry order block on the daily, and it would have worked very nicely. The top of the structure would have been there. Perfect. You have the reversal. It taps it. The thing is, the quasi can still be reused. It's not like the order block. But once you tap into it, there's the first attempt, and that's the best one, and the second one is already inferior. With a quasi, you will still have this kind of move, right? Because the market sometimes, when it reverses, sometimes it breaks the neckline, it comes back, that's the quasi, it moves out. But sometimes it keeps on doing this as it is moving out. Not that beautifully, of course, but something similar, meaning it can come back for a second retest of some order block that was created by the first, in a way, creating a second right shoulder, right? A second opportunity for catching a right shoulder. So that's the idea. You could consider this a reversal. And if you do, and one of the requirements for the quasi to still be in play, it has to take out this the previous high of the structure. If it doesn't take it, then you're not having a second right shoulder. You're actually having a failure of the quasi, right? So that means that we are, as you can see, it took it out, meaning that we can look for that possible second right shoulder to be created. And if we did that, we would have to measure from this low to this high, and this becomes our next structure. Now, this is a very ambitious to expect this, because the higher time frame already created a bearish structure here, right? Something we didn't have before. So I wouldn't be targeting that high again, but that reversal structure can still offer you plenty of opportunity, because as price comes back and forming that second quasi or the second right shoulder, you will have these pushes from these structures to an opposing structure. Maybe that structure, maybe this one, who knows, maybe that one, right? And that's already, because it's this higher time frame, that is plenty edge to be caught here. So that is something. Let me see if we have if this structure isn't too big of a structure. That was one. We didn't have any reaction of that. No, we didn't. So you wouldn't have been it wouldn't have taken you out. And let's see, we do have this one here, which coincides with this one, and actually you can take this whole area as one big area. And unfortunately, on the daily time frame, it has been already invalidated, right? So that quasi to me is no longer there. That was the last order block, entry order block. So I'm not gonna be using that quasi, because those are the rules. If the quasi doesn't have an order block, then it's no use to me. So let's see if we get the reversal from current prices, and we haven't had it yet. We did have some nice bullish order flow, as you can see. Price comes back to that order block, it creates it, comes back, moves out. That's what we want to be seeing if we are expecting price to be going higher. So let's see if we have anything on the lower time frames. actually we had a very nice quasi as well. If you were, if someone would have, if we were to have looked at this earlier, we could have been taking this trade. I know this is after the fact, but you can see how this neckline was created way before even the head, of course, right? That's how it works. It creates it, and it's after it takes out that neckline. That's when you start looking. You go back with that retracement tool, and you go back and you identify the order blocks, the entry order blocks, and you just wait for price to come back to one of them and see if it reverses or not. And you can see there, let's zoom into it. It's after the fact. It's not going to help you get any profit. But if you can understand how the market moves and reverses, then you can spot it the next time around, because this pattern happens over and over and over again in all assets. It's a gold mine once you know how to read it and to expect it. As you can see, the order block is here. Price comes in, and what we see there, we see how the one from these bars, you can see that the sellers were in control. It creates that bullish order block, and something happened right there. And do we have a reversal? It didn't get all the way. It didn't retest that order block. But even so, you can see how that reversal. So if you go to the lower time frame, perhaps you could have seen or get an entry, or even if or perhaps in here, right? Doesn't matter exactly how you approach the setup. What is important is you understand that there is a reversal in play, and that there is a progression to it. And sometimes it comes back to the retest, sometimes it doesn't. But the importance is, if you know the direction, or at least the intention of the market, that the market is going, you can target, yes, the top of the target, the top of that structure, which would be the last swing high, and that would have hit target today. So that was a very nice quasi. In my opinion, the H4 is done. So I don't have anything. There's no trade. The trade was getting in as the market was reversing in here. That was a trade to me. So I would say I wouldn't go to any lower time frame. To me, the daily is bullish, but you want it to be entering there, or something related to that order block, not while we're making, breaking these highs, because the risk of price retracing on its way higher is too high, right? This is perfectly bullish, but you would get stopped out, or your stop would be so low that the target will not be, worth the risk. So I would say let's wait to see either prices break the daily, or form perhaps some other structure on the H4. So a very good one. I like this asset. I didn't trade it myself, but whoever suggests we looked at it, it's a very beautiful, very technical how that reversal happened within that monthly demand area. So let's look at the golden asset. Gold itself making all-time highs all these days for some time now. All right, so let's look at that. Oh, you wanted to look at that, Mike? Maybe I'm taking your spot.
No. I'm just looking at gold now. People are asking whether we're long or short. I was talking about it earlier this morning. I still think we're going to be going short today. And the reason being is that Friday's daily candle, although we had this wick rejection, created a perfect equal low. So an exact equal low to Tuesday's candle, which for me creates a significant level of liquidity for price to react from. So I was looking at earlier today, I was looking to see if we might get a reaction of this area here. It didn't happen. We did stall at it on Friday afternoon, but it's broken past it. We're now pushing back further up to this move that we had on Friday of the back of the news. So it seems we want to close this gap completely before we start moving south, but I'm still very, very much of a bearish sentiment on gold. Just looking at it from a structural perspective, we have this major liquidity down here. We may well still go for all-time highs, but I don't think we're going to be there just yet. There was interesting. I think it was Randy said that we were joking about that audit that they need to do at Fort Knox. If the gold isn't there, then gold is going to crash. The thing is, though, is if the gold isn't there, gold wouldn't crash. If anything, if the gold isn't there, gold would skyrocket, because that then means that the supply of gold that we thought we had is even less than what was anticipated. So when you've then got a squeeze on the supply, then price will go up because it's even more rare than people assumed.
Although there is a point, though. There is a point to Randy's point, if that's a thing. The point is, if you can't trust the custodians to have what they're supposed to have, because when you buy into these gold ETFs, you are trusting that they audit their reserves, and the gold that you're buying, you're buying a piece of that gold that they're holding in a safe. And if in Fort Knox turns out not to have, I don't think that's the case, but if it turns out not to be the case having the gold, then it means that, it's a systemic risk, meaning, can you still trust the system? And that could be,
true.
In times of uncertainty, that would make gold skyrocket, because if there's systemic risk, gold is going to go super high. But what if the systemic risk is gold related, in trust in their own gold reserves? It's going to be tricky, I think. But I don't think that's, I know we joke around the auditing, and I actually do believe you should audit. You should never trust blindly. You should, these things should be audited all the time, and they haven't been. So it's actually a real thing, according to some, sources that I read. Apparently in decades, they haven't been audited. So it's about time that they are audited, but I don't think they're missing. I know it's, go ahead.
I'll tell you what it would be, is it would be incredibly bullish for Bitcoin.
Oh, yes. That would be the perfect scenario for Bitcoin to hit whatever big number everyone is.
Massively.
Yeah. That would be
massively bullish for Bitcoin.
Confirmation of the digital gold.
100%. So yeah. I see we've got, I'm sorry, I'm not going to try and say your name, but it's saying that we'll dump tonight. That sounds like insider knowledge to me, Victor.
Maybe
we may have a gold whale in the stream with us today, who's going to flood the market with gold supply by selling their bag. Who knows?
Maybe that's a central banker who's watching our stream, who's ready with their finger on the button to sell tons of gold.
Do you know what? Maybe we have the man himself. Maybe we have Trump or Musk watching us with one of their aliases. Maybe that's what this is. Or maybe it's one of the Trump sons. Maybe it's Eric, or I don't know. Guys, let us know if Hai Huang Dang, if you're actually Eric Trump or Donald Jr., then let us know. Give us some validity to the signal that gold is going to dump tonight.
No, but I think he's not going to do that, because then he's going to blow his cover, and the plan is not going to work. He's got to keep his identity concealed in order for this market to do so.
That's true. That is true.
Then again, I think it's my speculation on my part, but from what I see or from what I read, the Oval Office has been decorated with gold ornaments, and I think our good old favorite president will not want the gold to go any lower, right? He's a gold bug.
Nobody wants the value of their toilet to go down. So, if he supposedly has gold-plated toilets, then, he's not going to want the value of gold to go down, is he? So, you never know. Bill Awal says, can gold go more down today like Friday, because it's now on the same level like Friday and before, and now it's in a short downtrend? Yeah, that's what I believe gold is going to do. I think gold is going to sell off, and in fact is interestingly right now a really nice level where it is sold off, broken past the 200 EMA on the 15-minute, but it can't close above it. So it looks like it's in a nice sell trend right now. On the 1 minute, it's a nice setup, if I'm honest. It is one that I've taken very quickly with just a small level of risk. So position is, I think I got in at 307 just here, stops just up here, and selling off. I'm going to hold it open until I see a counter setup suggesting that we're going back. But the first level of resistance is going to be here. So we'll wait and see how that one plays out. But it could easily come all the way down to take that daily low, because gold likes to do that. Gold likes to kind of entice everybody into the buys, which it looks like it's doing right now on the, on that trend. If you look at it, it's got a nice trend there. But there's all of this liquidity, and this level is not going to be left behind. And it's what's also interesting is look where it is. It's just below $3,000, which is a massive psychological level. So I'm not saying this isn't a signal. This isn't, this isn't financial advice. But
it isn't.
In my
it
no, it's not. In my experience, gold will come back for those levels. When you have that kind of level, specifically when it's exact. I'm not talking about, it's around about the same price, right? It's a few cents here, a few cents there. I'm talking about the exact same price to the cent, and it's on a daily time frame. That is significant liquidity that price will come back to take, and will close out to create equilibrium. The fact that it did it on a Friday as well is even more powerful because it's the end of the week. So it's got a level on the weekly candle yesterday that suggests that it's going to be taken out.
Yeah, I can see that happening.
I can see M76. M76 is asking if there are any more trading competitions. There are always trading competitions. M76 is one of the reasons why the 5ers did a big dashboard upgrade last year. This was one of the main features that they wanted to be able to implement. So yes, there absolutely will be. The best thing for you to do is to make sure you are in the 5ers Discord. If you have a 5ers account, you can go in and you can join the 5ers Discord. We have currently I think it's well over 20,000 people in there now. It is a great community to be a part of. So we wholeheartedly encourage you to join the 5ers Discord, and you'll get all the information in there. Abe, the community manager, shares all the time what kind of updates and what kind of competitions and everything else are happening. So yeah, make sure to check that out. Want to try and win an account? Yeah, I'm signed up and everything, but haven't seen anything for a couple of weeks. Yeah, I mean there isn't going to be everything every week, M76, because the competitions take up a lot of time and resources to manage and to run. But yeah, there's all sorts of different bits and pieces happening and all sorts of different stuff going on. So make sure you check that out. The other thing that we have going on at the moment, which we have recently launched, and as you can see under my name, where I'm kind of associated with, is the AlphaBeta Lab. Those of you that aren't familiar with the AlphaBeta Lab, then I will ask my friend Alex to just tell you a little bit about it.
Traders, stop going at it alone. Now join the AlphaBeta Labs, a free online community built by traders for traders. Share your insights, drop value, and get rewarded for all of your contributions. Now there's no limits, there's no gatekeeping, all traders, all markets at all levels. So click in the description below and join us right now.
So there you go. Those of you that do not know about the AlphaBeta Lab, where have you been? Where are you? You've got to get in there and check it out. So I'll stick a link. I'll share the link in a second. But the AlphaBeta Lab is our new community that we're doing. The specific aim is an educational community where the education is provided by the traders for the traders. So make sure you check that out. We'd love to have you with us in there, and there's loads of rewards and stuff going on in there as well. So make sure you check that out, and we'd love to have you with us.
I was looking into the reward system that you guys that we published in AlphaBeta Lab recently. It's very enticing. Hub credits, plans, Edgewonk,
Absolutely.
many
Absolutely.
rewards. Very interesting. I mean, as a trader, that's exactly what you want to be getting in return for actually seeking out knowledge. So you get rewarded on top of rewards. I mean, what better way to do, learn to trading, to learn to trade. You get the knowledge and, hub credits and even accounts, right? There's even account at one of those 100K account, I think I saw.
Mm-hmm.
Awesome.
Yeah, absolutely. So the more you contribute, then the more rewards you can earn. The key thing is it needs to be good value contributions. We are offering these rewards, but we're offering these rewards based on the fact that we want people to contribute something that's valuable. We don't want people coming in and saying, "Oh, here's an Instagram post," right? Or here's a quote from something. We want people to really think about what they want to share, what insights, what ideas, what thoughts do they have, and share that with the community. And those are the people that are going to be really rewarded. So yeah, and as Mark says, it is absolutely for free. Yeah. So that's something that you should really take advantage of, because it is something that we're working a lot on. We do live streams every day. I'm here in the $5ers stream because of the AlphaBeta Lab. So come join us. We'd love to see you in there. If you've got any thoughts or insights or anything you want to share, then let us know.
And it's all for free. Where else would you be getting this? At the real prop firm, the 5ers, the solid choice you should make when you're trading a prop firm.
Yeah. And just to be clear, you don't need to be a 5ers trader to join the AlphaBeta Lab. The AlphaBeta Lab is open to anyone and everyone. So you don't have to be a 5ers trader. We're simply just powered by the 5ers. So we'd love to see you guys joining us. Make sure you jump in and come and see us.
Good stuff. I'm so grateful to be part of this movement, if we can call it that, right? Where we are, taking care of the traders, of the retail traders, in any way we can. Not only in offering capital with a solid company, we're offering all kinds of initiatives, communities, Discord, AlphaBeta Lab is being launched, or it has already been launched. I mean, these are opportunities that weren't around when I learned how to trade. So imagine what you can do with these opportunities when you're coming to the market, or you've already been in the market for some time and you're looking to grow. You're looking for community, for other, people around you who might teach you a thing or two, right? We all think, right, they are mentors, and yes, they have their place, and you can surely learn a lot from them. But from each other, we can also learn, because, if I learned something and you haven't yet, that's knowledge I can share with you and you can gain from, even if I'm not, very high, or let's say one person isn't like level 10, even if it's just level 5, that person level 5 can teach someone who is just starting out, perhaps, can share a couple of things. And, that's how you grow as a community, right? You don't have to be super expert to be able to contribute. If it's let's say risk management, right? The basic of risk management, you can learn that from others who are in their journey just further down that process. And that's the beauty of communities like AlphaBeta Lab and so on.
Absolutely right, Victor. It was interesting. I was listening to a podcast this morning talking about, it was an English football player in the UK, and he was talking about how he's trying to encourage his children to get into football, because some of them want to play football, some of them want to play basketball and everything else. But he was talking about it from the perspective of, if there's something that you want to do, what should you do? And he was like, you have to put in the effort, you have to put in the time, you have to be willing to go the extra 5 yards, and you have to be willing to study and learn it and practice and practice and practice. The likes of Messi, well, Messi is a miracle of nature, I think. But you look at Ronaldo or any of these other guys, they train and they train and they practice and they practice and they practice and they practice, and those are the ones where it becomes just second nature. And that's why people think about whether it's back testing or forward testing, whatever it is, whatever approach you take, these methods have validity because they help you to see things second nature. They help you to see things with instinct. Certainly from a trading perspective, that's the other thing, is to not do it half-heartedly, but to really give it your all and give it your full attention. And you can be successful. You can absolutely be successful, but you have to treat it in the serious nature of what it is, for you to be successful.
Sure, and there's also a lot of value in surrounding yourself with people who are wanting the same thing, who are willing to put in the effort, right? Because if you're the only one around you that is putting the effort into trading, it's going to be very difficult to keep on doing it every day, day in, day out. But if you're surrounded with like-minded traders who are putting in the effort, doing their back testing, even if it takes weeks on end, getting their data, you're not alone at it. And that gives you power, gives you stamina to keep on doing and keep on pushing your boundaries until you find that edge that you have been looking for. It has a lot of value surrounding yourself with the right kind of people.
Absolutely. Hey Marina, good to see you. Hope you're well. JP, there you go. Hopefully you can see or hear the music. Well, see the music, hear the music. So hopefully you can hear it now. Our resident Hamed is suggesting we look at EU. Here is EU at the moment on the 15-minute. Certainly showing some strength coming in on the dollar right now, which ties in nicely with my gold sell, so I'm happy with that. So yeah, we're still ranging overall though, Hamed. What is it you're looking at? Let's see, what's William saying? Miracles of birth do not exist, but as you say, Mike, it is repetition, 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 and above all, learning a lot from professionals and not repeating your own mistakes. Absolutely, William. The reason I mentioned Messi as being more of a miracle is because if you read anything about him, he literally, other players who have played with him used to still say that he was a terrible example to younger players, because he would just show up and he wouldn't stretch, he wouldn't do anything, and he would just be some kind of magician. Whereas you look at somebody like Ronaldo, for example, and he has really truly honed his skills and put in the time and the energy and the effort. I'm not saying Messi hasn't, but Messi just has this more natural a gift, let's say, that just comes naturally.
But then again, I've seen not a lot of the commentary on Messi, but I did see fragments here and there, and I saw where he would be playing football all hours of the day since basically since he was able to walk. So it's yes, to him.
True.
He's
true.
been
in his way, he's found his passion and he's practiced his passion, much like Ronaldo or anybody else. And I think that's what can be the make or break with your trading as well, is being confident and sticking with it and doing what you love. I think that the analogy of him being a bad example to younger players is based on the fact that he doesn't do stretching and shows up as and when he wants for matches and everything else. That's obviously not necessarily showing any discipline and that sort of stuff. But as you say, if he's been playing since he was a child, there's a lot of almost second nature that comes with it, within that mindset. So yeah, doing what you enjoy and doing what you love, then that's definitely a good way to go. So yeah.
Someone is asking, what is a quasi? Go ahead. You were going to say something, Mike?
No, I would never dare to interrupt you explaining a quasi, Victor. I would never even want to even try.
A quasi is short for Quasimodo, Rob. I'll show my screen. Thank you, Mike. It's very simple. It is a market structure shift. Yes, you could say it is. But more specifically, it is a variant of the head and shoulder. This is the textbook example of the head and shoulder, where you have the head, one peak, and two on each side, lower peaks, right? And there is symmetry, and when it gets to this level and breaks this neckline, what I'm talking about is, of course, the head and shoulder, the textbook example, the classical reversal pattern. When it breaks this low, that's when the head and shoulder is confirmed, and you're supposed to be trading it as a short. That was at least the textbook example of how you should be trading it, either with a tight stop loss or not, and then target something. This is not a quasi. I know I'm taking a detour here. And you take the typical would be the height. You measure the height from the base, and that would be your initial target. This is the classical reversal pattern, the very popular head and shoulder, and popular for a good reason. It's a very good, but the quasi is a variant of that. So it's not the head and shoulder. It's basically the head and shoulder. Actually, I should take it back and just the head and shoulder, but it is asymmetrical, right? So it's doesn't have symmetry. It's not symmetrical, and it's no longer. Normally, this wouldn't be considered a head and shoulder. It can be even less like this, right? Where it doesn't have that symmetry, where you have equal two highs, the two shoulders. And in this case, you'll have this as the neckline, and you wait for price to come back to some area of, in my case, I look for those order blocks, and then I trade. Instead of taking the trade, I would basically, it's a reversal pattern, and I would take either the structure that I'm considering the right shoulder to be used or to be constructed, to be formed, or the whole head, and target not the continuation necessarily, but just the low of that structure. So it's a variant of the head and shoulder, a reversal pattern, and in my opinion, it's my favorite structure, my favorite pattern. I use it all the time, every day, all time frames, and if you build a system around it with objective rules, it can take a lot of guessing out of trading.
I just want to reference. I don't know why he's sitting and trolling us in chat. But Alex is saying that he's asking why are we not buying gold. Well, you know what, Alex, the reason we're not buying gold is because I'm selling gold and I'm moving the market. So yeah, we don't need to buy gold. Just sell it, man. Sell the damn thing. So yeah, going into a nice trade at the moment. Overall, it would be nice if it goes all the way down to this level. Somebody did ask, why am I going short on gold even though the trend on the 15-minute is long? The reason being is that trends are there to be broken, and they can't keep going forever. So I'm looking at the sells, because if you look at it, we have pretty much closed this entire move up. We've come in and we basically closed it up into here, and we are now still leaving this liquidity level that I mentioned earlier. It's a perfect equal low on the daily and multiple other time frames. So price came down and created the exact equal same price. So that's why I'm looking for sells on gold, because I believe that this level here is going to be taken. And it's just a question of waiting for when that happens. We have this previous zone of interest where price has had reactions from in the past, and it's come into it again, and it's pushed off quite nicely. So if we look at it on the 1 hour, we can see that we've also got this nice push down. We're coming up to the last 10 minutes of the 1 hour candle. So I just want to see how this one will close. But if it continues with its bearish momentum, then that would be a nice indication for me that we're going to be starting to see the change of direction. The next area of resistance is going to be this 1 hour candle here, this wick. That's going to be the area to just keep an eye on and see how price reacts from there. But I don't think it's going to hold because we have liquidity levels at multiple places all the way along here. So I think we're going to be going south, which is what's happening right now. So lovely little gold short, looking quite nice. The only thing I don't like about it is the fact that we now have two 5-minute candles which have opened up without a wick. That is never normally a good sign. So just need to keep an eye on that one. But right now, I'll happily take that sell.
We have one question here. I think it was over here. I saw it. I think it was when I was explaining the quasi. Someone commented that it's a swing failure. If you're referring to the pattern that Trader Dante teaches or talks about all the time, then not exactly. Let me go back to my screen. If that's okay with you, Mike.
Go for it.
Let's see. Let me see. Where do I have that? Where did I put my quasi? Well, it doesn't really matter. I'll put one again. I'll mark it again. I think it was here. The quasi, right? That this is the quasi that I painted, and yes, if it will look like that swing point failure. However, that's not the point. The point isn't that price is going to come back and react on the neckline, although it does do it a lot of the times. But that's not necessarily, at least not my way of getting into the quasi. This could be a quasi, but I wouldn't be trading it necessarily because of its bouncing off that neckline. You could do it, but I use order block for that. And for this could be just like this, like so. It doesn't have to be that neckline necessarily, right? I look at different. My approach is a little different, so it's not a swing failure. Although it may look like one from time to time. All right, let's see.
William, I don't like a large candle without a wick. Not necessarily a large candle, William. Any candle when there's just no wick. So if the open or the close are the same as the high or the low of that candle, to me it just suggests at that moment in time, price just shot down straight at that very minute. And so then there's a lack of balance in the market at that moment in time. So price will generally come down and take those levels out. Works really, really nicely on gold. I use the Forex.com feed on TradingView, and it gives me some really nice levels. So yeah, it's not necessarily right. Okay, that level is taken. That means we're going to reverse. It's more that's the area that I see price heading to. So you'll always have it on either side. Wherever you are, you'll have liquidity above, you'll have liquidity below, and it's just trying to calculate the best way to find whether price is going for the higher liquidity or the lower liquidity. That's basically how I look at it. So yes, a big candle can be proof of strength, but the point is when there is no wick, that means that it's just shot up without any kind of validation is probably the best way to put it. No problem at all, William. Always good to see you in here with us. Daniel is thinking that we're looking bearish on the pound, which would also be very nice on gold. Gold is pumping back up again. But here's an example. So, William, you were just asking, if I just pull up my chart again,
Yes.
So here's a really good example. So most people would be looking at this and saying, right, okay, gold is is pumping, gold is going long. But for me, the fact that this 1 minute started with no wick, right? So the low and the close, the low and the open are exactly the same. That for me is major liquidity. Okay, yes, price has pumped up, but what did it do? It came and it took a wickless candle here, and it took a wickless candle here. It's come and taken those out. Okay, and now it's selling off again. So those levels are when it's just been so impulsive, the price tends to come back down to it to equalize the buyers versus the sellers, which it has to do. So if you see here now, right, we've had this 5 minute candle reject as we crossed the 200 EMA. But what did it react from? Well, it actually didn't react from anything other than creating a very, very close equal low. Okay, it wasn't perfect, but it basically came and took this low here, and it's left this one. Okay, this one here isn't valid anymore because this one's been taken by this candle here. But you see how gold is very, very good at trying to catch people out by changing direction. So this candle here, this one right here, okay, that 5 minute one before the current one, that is a candle that would have gotten a bunch of buyers into the market on gold, right? I'm pretty sure that some of you on this stream right now probably thought, oh, gold's reacted, gold's going back up. But I'm not touching it, because as you can see, it's come back down. And the reason it's come back down is because they're trying to get all of the buyers to come in so they can take them out. As you can see, it's pushed further down, and it's now created this really, really nice engulfing 5 minute candle, which is closing still another 2.5 minutes. So it's not confirmed, but right now, if it continues as it is, that's a really, really nice bearish signal.
Avoid. I think Mike is the next market wizard that we haven't read about.
It's just being able to read it. It's not easy, believe me, it is not easy. But when you do catch these wins, I mean, look, if this one goes to where I'm hoping it will go, I don't think it necessarily is guaranteed. But if we look at it on the 4 hour, it looks really nice for sells. Why? Because we had this big engulfing candle on the 4 hour, right? It took this inside bar. We've come up, we've tested this wick, and we've now got another just over an hour to go on the 4 hour, right? So this could form now a really nice selling bearish 4 hour candle. We're a long way off the 200 EMA on the 4 hour. And as I say, this level here is major liquidity, massive major liquidity. So this as a take profit will be really nice. As a trade, I mean, that could be, 22R, 22.89. I mean, if that happens, that's insane. I'm not saying that it will, but that's what might work.
The audience wants more of you, Mike. They want you to spill the beans.
But guys, listen, this is one trade, right? If you knew how many accounts I have blown and how much money I've lost on trading, then you wouldn't want to know what I know. No, it's trading what you can see and what the markets show you and what you can backtest, right? At the moment, that 5 minute candle is now rejecting back up again. So it's doing as the previous one did. Okay, and what this is doing is just chopping up retailers, right? There is a bunch of retailers that are probably going to go and jump in again and say, we're in longs. I'm not necessarily saying that we're not, but look at how it started, right? It hasn't tested this low. It's just created this low again, right? We've now got this area to bounce off. So if longs are taking over, longs have to break this wick. That's where we have to break, right? But if we look further down, if we look at these areas here, have we got any liquidity to target? Well, we have got, I think, if I'm not mistaken, No, we haven't there. Let's see. Let's go further back. Yep, that was the one I was looking for. That there. Perfect equal low on the 1 minute. That is a level where price came down, and not only is it equal low, it's a wickless equal low. So price came down and shot straight back up. That is not a level that will be left for long, and that's why I'm in the shorts right now. It's just a case of trying to find the setup that gives that confirmation to you. Right now, we're forming another engulfing candle to the downside. That's, there's nothing at the moment that suggests that my setup is invalidated. Once this level here gets broken, then fine, and probably I'll close it at that point. But just have to see. And there we go. So it does occasionally break those candles. So if it pushes on further up, then I'm going to be closing.
Yes, Vinicius, that is how we learn, right? We can learn from many different ways, right? Someone just telling you it, or you can observe someone else making the mistake, or you can make the mistakes yourself, right? Different ways you can learn.
Exactly.
But that's how we learn, and that's the power of having a community like AlphaBeta Labs, right? ABL, right? You can learn from each other. You don't have to go through the same mistakes necessarily. You can learn from each other. As Mike is sharing his precious knowledge, how do you think he got that knowledge? It's by paying the price, right? By making those mistakes. He's talking about experience. That's why he can be so confident in, right? Because he's seen it time and time again, how this happens, and the market tricks him out of something or makes him think of something. That's how we learn. That's exactly how we learn. That also applies to everyone, basically, for myself as well.
Yeah, absolutely, Victor. And I think the other thing as well is you have to spend time just analyzing it and checking it. The thing about trading, especially on gold, but this isn't just exclusive to gold. The only reason gold is difficult is because it moves so fast, and because it moves so fast, it induces a lot of emotions and a lot of adrenaline, far more than other currency pairs or other assets, right? But gold in itself is difficult because of that, because it plays on your psychology, right? But if you look at it on the 4 hour, it hasn't changed my perception. It hasn't changed my perspective. All I've done is I've simply entered on a really low time frame. I've basically entered on the 1 minute, and the 1 minute was this price rejection here. Price came up, created an inside bar, had another wickless candle. Price came down, came up, wick rejected, and we've gone off and we've started selling. And that's basically what my confirmation was, right? We had this engulfing candle here on the 5 minute. Price couldn't break it. Pushed back down. Those are the kind of the reasons why I get into these trades. If I look at the 7 minute, it's actually potential that price will either break this area and continue going, but again, it's created a wickless candle here. That low down on this area here, that is going to be taken. I'm certain of it. That is going to be taken. So yeah. At this moment, do you trail your stop loss or you don't until a certain lower level is broken? William, I would normally probably go to break even rather than trailing the stop. This is probably one of the things that I need to work on the most, is actually banking my profits. But this particular trade that I've taken, I've literally risked, I think, 0.2% of my account. So it's worth about $10 on a 5K account. So the idea is that if this one loses, I've still got a load more opportunities, much like Victor. Got a lot more opportunities to have a winning trade that will easily cover all and any losses that might come through. I'm actually holding on to this one for the time being, and the reason I'm holding on to it is because I can see this liquidity here But because we're still on the 4 hour, we've come to this area. So this next hour candle, I don't expect us to see that broken. Probably what we might see is we might see this area here taken. But we'll see. This is a nice area for the 7 minute to see if there's a reaction in there, or possibly even on the 5 minute. Actually, that could also be a nice area for the 5 minute to react from. So,
and we're joined by Jonatan.
Yes,
also,
Jonatan, you're out of drawdown.
No, I'm still in drawdown, but I got sick of that clown costume, so now I am back. I'm no longer a clown. I might be back as a clown tomorrow, but honestly, I feel like I can't just be clowning around every day. Gotta be serious as well. And
we have go ahead.
No,
we have a lot with. The audience is expecting or anticipating the coming on of Dr. Deanna Cole.
Yeah,
we have a lot of anticipation for her.
Fun. There you go. You got me. You wanted Cole. You got me. That's it.
All right, I'm gonna be right back.
Victor.
Yeah, I'm gonna come back in about 54 minutes and 53 seconds. See ya. Bye-bye.
Goodbye. You're going to break as well, aren't you?
I am indeed.
All right.
I would love to keep you company, but alas, other work is calling me. So
it is what it is.
Yeah. Let's see what happens with gold. Gold, unfortunately, is pulling back, but we'll see how it plays out. On the 3 minute, it doesn't look great, but there might still be an opportunity for it to trace back. We will see. That 1 minute candle isn't great. So, alrighty, see you later, guys.
All right. Later. Okay, so now it's me. It is I. That is actually a better layout. I like that better. If I do this and then I can kind of zoom out like this. Oh, that looks terrible. But if I draw a little bit like that, I like that better. Okay. Man, I'm a bit tired. I got a headache. Where's my screen? Let's put the screen on. So I am trying some things here. Trying some new things here. My account level, William, I'm at 9,234. Not looking great. This is a good indicator, by the way. This is a good indicator right there. I went into indicators. I typed in session, and then there's this called trading session. Oh, it's actually TradingView's trading session. Ah, so TradingView has their own trading session indicator now. It's a really good one, actually, for all the different trading sessions. All right, we got Deanna Cole. Can I add you? Great. Welcome.
Good morning. I'm doing well. How are you?
Good morning. Well, I'm good. I am good. I've been trading here all day. I feel like these it's the morning for you, but it's 2 for me, and I feel like it's just in the middle of the day, but still all of my energy has gone towards trading in the early hours.
What have you been trading this morning? For me,
I'm trading gold.
Afternoon for you.
Oh.
Trading gold?
Yeah. And I'm trying to build a system on Nasdaq based on the US Open, and I'm getting some interesting results. So basically, I'm gonna show you. So I have this session indicator on here, and we're gonna keep the New York session on here. So it's basically based on the first 15-minute candle. Now, the first 15-minute candle must be this one, because the market opens. Oh, wait, does the market open on the open of this candle?
Is that from? Oh, that's Friday. Okay.
Yeah, that's Friday. So the market opens. Now the question is this the... So when I drag the mouse over this candle, it says 14:30, and that's when the session is supposed to be opening for me. But is that the open, or is the open on the close of this candle, or on the open of this candle? So we're gonna see. Let me see. So go to the 1 minute. Wait a minute, I did that wrong. Okay. Let's try this again. So that's the open. If I add a level here and go to the 1 minute, maybe someone in the chat can help me out here. The time that comes up when I hover the mouse over a candle, is that the open of that candle or the close of that candle? It must be the open.
If you look at the top, it says open, high, low, close at the very top.
That's right.
Yeah, do you see it?
Yeah, but what I'm thinking is open. Okay, so that's the open of the candle. So if I go to the 15-minute, then the first 15-minute candle of the session is actually this one, right? That one. That's the first 15-minute candle. No, because okay, so it opens and then it closed. Okay, so now I get it. It's the open. Well, then I have to calculate the whole strategy again. So basically what I'm trying is, what I've tried, and I got the times wrong, but the idea that I'm testing is, if the first 15-minute candle is bullish, what is the probability of having the next candle being bullish as well? So trading with the candle. So for example, what if I go long in the close of the first candle, stops below the low of that candle, and then see what is the maximum potential profits, and then look at how many are winners, how many are losers, and what's the best possible exit price. What I've seen from my testing is that this is a winning strategy around 55% of the time, and it works 80% of the time on Wednesdays. And it has a below 50% win rate on Mondays and Fridays, but Tuesday, Wednesday, and Thursdays, it has above 60% win rate, with Wednesday being 80% win rate. So it's really good. And I found that the best exit is 1 hour. So on average, most of the time, you will see that, and especially on Wednesday, then on Wednesday, it's going to be a 80% win rate. So on a Wednesday, well, it's only 100 trades, but still it's something. And I've tested 2023, 2024, and 2 months in this year. So what I've seen is it has a positive expectancy of, if the first 50-minute candle is bullish, then most likely the next 50-minute candle is going to close bullishly as well. And if you put stop loss below the low of that first candle and your TP at 1 hour, it should have a positive expectancy. Now, with the fact that the 5ers offer trading on Nasdaq with 0 commissions, it might actually be a profitable system. So I'm going to try that today. So we have the that line. We have the first 15-minute candle closing, and that's going to be 15 minutes into the trading session that opens in 15 minutes, and I'm going to be taking a trade. And I just bought a hypergrowth account, and I'm going to be trying that idea on that account with a very low risk. So I'm going to log in here. So it's a 20k hypergrowth, and we'll see if it works. There's still a lot of testing to be done.
Are you buying it at the close of the first 15-minute candle? Is that correct?
Yeah, so it should be 15 minutes into the session.
Okay, interesting.
And the idea then,
hear how it goes.
Yeah, and the idea would be that if there's strong bullish momentum, in the first 15 minutes, the idea would be to see some type of follow through throughout the first part of the session.
Now, will you use that same strategy to go short, or is this long only?
Okay, so I'm gonna look up the statistics on it's for shorts and longs, but given the fact that it's a equity index, it should perform better for long. So I'm gonna see if I can find that statistics. Let's see, I have my spreadsheet here. We can see if I can find that. When I get this idea and I start backtesting, it's all I think about. It's all I do. It's all I think about. I've been like staying up late all weekend, like barely sleeping, is testing this and testing all these ideas, trying to find, because I do think that there's actually going to be some edge in this. But I want to add. So I don't know. Like, do you think it makes sense to exclude some days of the week? Like, do you think some days there's more volatility in some, like Monday, for example?
The one that comes to mind is one that I would maybe want to know more about is FOMC morning. So FOMC morning tends to be pretty choppy, and so I don't know. It's just a guess. I would imagine that if you isolated that day, you might have different results for that day specifically. Other news events come out pre-market, so that's the only one that really comes to mind. And then, I would look at the different days, and it kind of makes sense that Wednesday might be like a continuation day, and so this might be a strategy that works particularly well. But that's the only day that really comes to mind.
Yeah, no, that makes sense. Definitely going to be testing that. So what I'm doing now is I'm just getting my initial information, and then I'm going to see if I can actually run a proper backtesting in a backtesting software. So I see here that I have long trades have a 58% win rate, and short trades has a 63% win rate, but the average R is a little bit better on long trades. So here it actually shows that short trades have a slightly higher win rate, which doesn't make a lot of sense, because I would think that in indices like these are biased to the upside for some reason. Because if you zoom out on the weekly, of course, and you zoom out, you see that. I would say that most of the time, but I did do some back testing in 2022, I believe, as well, which might have been influenced by the bear market we had back then. But it's interesting doing these tests, and then this is simple testing. Then what I'm going to do is I'm going to go through all of these setups, and I will see maybe it's the winning trades is an open range breakout as well. We got to see, like, try to combine some things here, combine some indicators.
Yeah, that sounds good. Keep us posted.
Yeah, hopefully I'll be able to scale this 20K account. But I'm gonna be starting very, very small on this one because the testing phase isn't really done yet.
Sounds like a good plan. I want to pop over to the chat for just a second. Vinicius, good morning. There's a question. Should we think on the psychology of the market or on the psychology of the traders, or maybe on both as factors and product of the market? That's a great question. I don't think anyone's ever asked me that before. And my thought is really, a lot of times you hear people talk about the psychology of the market, but really the psychology of the trader is the only thing that we can actually control. So we can observe the psychology of the market if there is such a thing, but we really can only control ourselves. And so for me, it's more focusing on psychology of the trader. Specifically, your thoughts, emotions are important too, but your thoughts kind of are in your control. And so I personally would focus more on the psychology of the trader. And it looks like, Jonatan, there's a lot of questions about what software you're using.
Oh yeah, I'm just doing manual. I'm just doing manual testing, and then I'm using different softwares just to compile the data and test the data. But mostly what I'm doing is I'm going into TradingView, and you can go to this is the testing tab. So you can see, for example, this trade right here. Now I have done a few mistakes here, I see, but so for this trade here, for example, I put on the long or short tool, and then I mark out the date and if it's a winner or loss, and what the risk to reward of the trade is, and the max. And then I look at I'll put it into an Excel spreadsheet that I have, and then I run the numbers to see if I can find the best combination. So right now I'm only using price action, obviously, but I will be adding things like maybe can go to the daily, and you can add like the 200 SMA and then only go long if the market is above the 200 SMA or something like that. See if we have or even the 50, could just do to the 50, right? And you would then see that we're currently below the 50. So below the 50, we would only look for shorts, which means during this period, we would only be shorting the market. And then, during this period, we would only be long the market. I think that might be a good thing as well, to try to catch, trade with the high time frames, and then play around to see which of the moving averages is best for that. And there are indicators where you can show the daily moving average on the 15-minute as well. I believe it's the high time frame EMA. You can go in here and you can select the daily and then the 50, and then you go to the 15-minute and you will see the daily 50 EMA up here. So if you're going to be testing on the 50-minute, you can visualize where that is basically. But I think that's something I'm going to be adding at a later stage, when I'm trying to backtest this from more of a, put it into a script and backtest it in like a software.
Mm-hmm.
What are you thinking here on Nasdaq? I'm curious to well, it doesn't have to be Nasdaq, whatever. But you're trading the S&P and the Nasdaq mostly, right?
Yes, and gold somewhat. But I'm most interested this morning in the S&P. Nasdaq and the S&P have been super bullish overnight. In the S&P, there was a pretty decent sized gap up. It wasn't a huge gap, but pretty nice gap up in the S&P overnight, and then basically continued upward pretty much all through the night. It did continue upward all through the night. So my 15-year-old actually wanted to learn some things last night. So we were looking at the market last night, and shortly after the market opened, there was a little bit of an opportunity to get in long, and then a huge consolidation sideways, and finally broke out of that consolidation, and it has just continued to move upward. So lot of strength in the NASDAQ as well. And I've also been looking at gold because gold had been at all-time highs and then had a couple days of pullback and is kind of, I don't know, maybe an opportunity to get back in gold. But mainly I'm focusing my attention today on the S&P.
Maybe you can share your share a screen and we can perhaps take a look at what you've just discussed there with the gold and NASDAQ.
So I need to get this figured out, but I have 2 laptops that I'm working on, and this one is delayed data. So I can share this, but just keep in mind that the information, the data is delayed here, but we can still look at kind of the bigger picture. So here is ES, and looking at the daily. Can you see that? Let me see here. There we go. Okay, so let me get this fixed here. All right. This is where my son was practicing last night. All right.
So on trading view, how old is he?
He's 15.
And so he's practicing trading.
Yeah,
that's awesome.
Yeah, it was fun. He wanted to learn some things. He's been wanting to learn some things. He wants to try and do the New York AM session. So we started with the Asian session, so he can kind of get a feel for how things work and watch prices. It moves a little bit slower. So looking at the daily, this is ES futures. So if it looks a little bit different from your chart, that's why. And price has definitely, had this nasty pullback. Relative to everything else, though, it's only been about a 10% correction. But right now, this is should be the 200, the 200 moving average and the 55 or 50 moving average. And so you can see price is below both of those. But last week, we had kind of this consolidation phase where price kind of stayed in this range all week long. And then, as of last night, kind of had this really nice breakout from there. So that is why I'm looking at ES. It's broken out of this consolidation, gapped up. You can see the gap up here on the daily chart. So price ended the week here and gapped up here last night. So still below the major moving averages, but this is a pretty strong push higher. So I have delayed data on this computer, so you won't be able to see, but we have the market opening in about a minute and a half. And I want to see how price, how price opens. We do have high impact news at 9:45 also. So that is another thing that I'll be looking at. Let's take a look here at the weekly. Here is the weekly, and you can kind of see even better here that this is an inside week. So we had this really, large bearish candles down, but then for the first time, we got a green week in 1, 2, 3, 4 weeks, got a green week and, an inside candle. So a lot of momentum to the upside. You can see that gap here. So it'll be interesting to see what happens when the market opens. Price is pretty close to the 50 EMA on the weekly chart. So we are about 30 seconds away from the open here. Let's see what we get.
I don't think it makes a lot of sense for me to trade based on the 15-minute close because that is the same time as we get the manufacturing PMI, which obviously, doesn't make a lot of sense.
I mean, It is
Yes, we got
it is a consideration. Maybe would you yeah, I'm not sure how you would modify. Typically there isn't high impact news right at the you know, just after the open like that. The biggest high impact news is typically, you know, 8:30 is when CPI is, and PPI, all of those are at 8:30. Okay, so we have the open here. Pretty big open down. Let's see. See how large that opening candle was. About five points in the S&P, I think. So that first big, the first 1 minute candle was a big push down, and let's see what price does now. It's back up into kind of closer into the area where it opened.
I've asked the viewers as well if Nasdaq is a buy or sell. We have 60% saying buy. I would agree with that. I think it would make more sense to buy. Because also, you know, on the higher time frames, I like how, I mean, I guess it depends on what time frame we're talking about, but on the high time frames, it does look like we have a local low, and I wouldn't be surprised to see a bigger move up to maybe all the way up to the high time frame, you know, where we broke the range. When was that? The 27th? But no, that can't be. Yeah, so that was last. Yeah, it was last month. Wow, that's a long time ago. Man, time flies. I remember trading within that range not long ago, and that was over a month ago now. Okay, so if this 50-minute candle would close bullishly, which I kind of would think there is a possibility of us seeing that, then I would go long. But then we have the manufacturing PMI, which would obviously add quite a lot of volatility.
Yeah, I mean, it's possible we'll just, you know, price open on that first minute candle pretty strongly to the downside, and then it seems like it kind of, you know, it dipped below just sort of that opening start there, and now the next couple candles are starting to push higher. So let's see if we get out of that, get above that 1 minute candle open, and it's possible price might just chop around before the PMI. Getting a little push higher.
So it seems like the news event is not showing up as a red folder on TradingView, which is a shame because I would want to see what happened last time.
Oh, okay. It is on Forex Factory.
Yeah, but it's I would like to have it on the chart, you know?
Mm-hmm. Yeah.
But I'm gonna go back and I'm gonna see, because I think the manufacturing PMI is one of the few events that actually happens around the you have job opening as well, happens I believe like 30 minutes after the open.
Yes,
but
that's
that's 30 minutes is okay, I guess.
Right.
But
yeah, it's kind of at an awkward time.
Yeah, and I need to
Mm-hmm.
I need to test this, because looking at the numbers here, it does seem like potentially my losses for this strategy are mostly around. Okay, so I do actually see that we have manufacturing PMI from the 3rd of March, but it's not showing up today. So on the 3rd of March, that would have been a losing trade.
Mm.
And every single time we have a news event around the open, I think the probability of getting losing trade on this strategy is quite high. So I would probably have to adjust that.
Mm-hmm. Somebody asked if the S&P news affects NQ. Absolutely, they go together. So the high impact news is very likely to impact all of the indices. You know, a lot of times the market moves together, but not always. Yeah, like someone just mentioned why the US 30 and NASDAQ move against each other right now. Let's take a look at, you know, they're different markets, right? So even the NASDAQ and the S&P, they typically move very similarly, but they don't always move exactly in sync. So it just, you know, that's just, sometimes they're kind of off a little bit. But we are starting to get a little bit of a push on the S&P. Still waiting for the NASDAQ to catch up a little bit. We're 9 minutes from the high impact news.
Yeah. So for this comment here, you can show past red folders in TradingView by going into settings, and then you can go to events and then use, and then there's a tick. You can check a box that says only show future events, and if you untick that one, then you will show all past events as well. Okay, so looking at this, if there would not be any high impact news event right now, it's looking like a short. But I'm fairly certain I'm not gonna take this trade because of the fact that taking this trade means that I'm basically entering a trade at the same time as a high impact news event, which is never a good idea, because
also isn't allowed, right? Isn't there a 2-minute restriction?
Not on the hypergrowth account.
Oh, okay.
It's on the high stakes account, because high stakes have much higher leverage. I think high stakes has 100 times leverage, and hypergrowth is 10 or 30 or something like that.
Mm-hmm. Okay, let's look at the US 30 real quick. I'm not seeing, they look pretty similar to me. NASDAQ, I guess I'm not seeing that. This is delayed data, but it looks like it's pushing higher. NASDAQ is pushing higher, and the S&P seems to be leading a little bit.
I think the indices right now just looks like a same overall structure. Wow, that's a big push to the upside here right before. Yeah. It happens before the news as well.
Right. So
this makes me think that someone knows, someone knows something. Because this is the current 15-minute candle it's a big one. Yeah.
Price is pushing strongly higher.
Can you go lower than the daily, or would that not show up correctly?
Let me go back. MES 2025. I just want everybody to remember this is delayed. Unfortunately, I need to maybe Jonatan, we can talk about another option here. So if I can show on MT5, then it would not be delayed.
Yeah.
But right now, let's see. This should be.
You can show MT5. That doesn't matter.
I don't have MT5 on. I'm using 2 laptops, and I have MT5 on my other laptop, but I'm having technical issues, and it doesn't want to allow my camera and microphone. That's why I'm on a second laptop. So
right, yeah, okay, I get it.
Can you see the 15? Yeah, so I'll get this resolved so that you can see a little bit better. So this is 15 minutes, but again, it's delayed 15 minutes. So you're still seeing that this is a push down. So it's not really super helpful.
Well, I think we can go over to my screen then, because I got the
let's go to your screen and talk about.
It's not delayed here, but this is the This is not the futures chart, but it looks very, very similar.
Yeah.
So I'm going to show you what this setup would look like if I would take it. So what I would do is I would wait for the close of the candle, and I would most likely execute the trade like just a couple of seconds before the candle close. Because sometimes at the close of the candle there can be some increased volatility, and sometimes it can move quite quickly, and it's going to move very quickly now, most likely with the news. But if the candle would close here, then I would be looking to enter here, and then it would just be a one-to-one risk reward. So, and I think especially in this local trend that we're seeing right now, the probability of seeing the next 15-minute candle bullish as well, if we close this as a bullish candle, especially if it's like a bullish engulfing an outside bar like this one, I think the probability is quite high. However, if this one closes as a bearish candle, then the strategy would tell me to go short, which I think is a very, very bad idea. But
yeah,
that's what I would have to do, I guess. But I'm not gonna.
Yeah, if you're doing a system, I mean, I think one of the things about a system is this is still a new system, so you're still learning it. But the thing about a system is consistency is the key, and you will lose trades, but the question is, can you take that trade and not get slipped too much or something like that? And when you have a high impact news event, if you're buying right at that release, it could be, who knows where you're going to get filled.
Exactly. It can be quite ugly, and that's also why it's important to keep note of the high impact news event, even if you're not, even if you're not trading a high stakes account, or you can trade through the news. I think it's definitely want to make sure that you know when the events are coming up. And for those of you who wanted to see the, you can press economic events here, and then if you uncheck this one, then you're going to get the past events as well. And as you can see here, it will be down here. And then if you add the new session and you add vertical lines, you will actually see which of the events come in at the open. So here, for example, you have the existing home sales coming in at the start of the session. And then here you have the consumer sentiment. There are a few events, and this one is job opening. So there are a few events that happen at the open. I think that might be problematic for this system. Okay, so now it's actually bearish candle. Okay, this is going to be interesting. Let's see what happens here. Lots of indecision here. You can definitely see now it's a doji candle. We have a big move to the downside, a big move to the upside, and now we're back around the open of this candle. And I think it's a lot of indecision because the market probably wants to move higher, but we don't know what the news is yet. So I feel like it's almost like we're on a loaded slingshot, right? And if the news is bullish for the indices, they're just going to release that slingshot to the upside. Everyone's kind of like waiting for positive news here, because if you look at the daily, this is a very bullish structure. Mm-hmm. And I would say that we're probably going to move up to this level where we have this. So if the market gets an opportunity for a bullish move, I think we're definitely going to see some strong bullish momentum here. Okay, so stop loss is going to be below the low if it's a bullish candle.
So it's below the low of the 15-minute candle.
Yeah.
I like what you said about using an EMA to sort of help you with direction. So for example, if you get a short signal today, but it's above, whatever EMA you select, a 5 or 50, whatever EMA you select, and you can use like even the 15-minute EMA. And if it's above that and you get a long signal, you go long. But if it's above it and you get a short signal, you do nothing. That could be a good way. I like that idea of how to maybe filter what trades you take and which ones you filter out.
Yeah.
Okay, we've got 3 seconds.
Okay, so I would enter here. So that would be the trade. Let's see.
Okay, so there was a little pop on the news. Wasn't a huge candle so far. I like to think of it as like there's red folder news and then black folder news. So
yeah, that's a good one.
Black folder news is like CPI, FOMC, NFP. Those are like the three main black folder news. And then kind of in between, I would say, are things like JOLTS is, really high impact, but not as big as like something like CPI. So I'm not totally surprised we didn't see like a huge reaction to the manufacturing PMI, but I still think it's always good to be a little bit cautious and know that that's coming. So for me, I'm still looking to get long the S&P. I've been kind of trading as it goes, moves higher, but I'm waiting now for the news to kind of get behind us and see a little bit more of an increase in the ADX. The ADX right now on the 8 range chart is quite low, and it's actually decreasing. So as we're consolidating and even like pulling back, it's not terrible to see it decreasing and being low, but I really want to wait until it starts to increase again.
Okay, so I actually did take a trade on the hypergrowth account now that I saw that the news event was not we didn't see any huge moves. This was quite a not as big of volatility as we would have seen with like FOMC or something like that. So if I switch over to MetaTrader, you can see what that trade looks like. So this is the trade right here. Looks like we're potentially about to hit that TP. So you can see the first 15-minute candle of the session bullish. Now I waited a little bit here to look at the initial momentum of the news. Now obviously it's very bullish, as you can see, and it hit the TP on TradingView, but it's continuing higher, so it's probably gonna hit the TP here. So this is a 0.25% trade. So I'm risking $50 on this trade, and it's let me see, is it 1R? I gotta look that up. Okay, so entry, I'm gonna pull on the 269.86. So I got my stop loss. It says that the risk to reward is 0.27, but it's not. Must have done something. Okay, so here I should put the right one here. That's the correct one. Yes, it's 1.13 R. But that's the trade, and that is the strategy. Now, looking at Mondays tend to be less profitable. But you see here on the 5 minute, I think we already had the volatility from the news. Let's go in and see what the actual number is, because if the number is positive, okay, so the flash manufacturing PMI is 49.8, forecasted is 51.7, so it's lower than expected, so lower than expected means that the economy is slower than expected, or the manufacturing industry is weaker than expected, and that is, what is that good for? Now thinking about the Fed, the Fed wants to see a weakening economy before they lower interest rates, and lowering interest rates is good for the indices. So this should be bullish for the indices. Yeah, so we should keep this trade open. As you can see, we're getting quite a good move to the upside here. So we're getting to that 1R trade. Nice. Okay. Hopefully
nice.
We're gonna hit
Nice
that
job.
TP.
It's always nice to take
Hopefully.
the winner for, you know, your first trade on an account.
Yeah, that's not that. That's always a good feeling.
It
I don't
seems
really
that's
like how.
Sorry, go ahead.
I don't like how prices on TradingView it's just shot straight up, but on 5ers but the prices is always going to be a little bit different between brokers. So I think the risk to reward on TradingView, and here I'm looking at Forex.com, it would be better, but I think it's just a matter of time. I mean, we'll still have a potential of a retest of that level. We'll see.
AB's asking, what did you buy? So this is go ahead.
Yeah, this is the Nasdaq. This is NAS 100, which is not the futures market. This is a CFD tracking the Nasdaq index. It's very similar to the futures market because with the 5ers it's zero commissions, so it's very similar. Because you don't have commissions on with the futures market as well, right?
Pardon me?
You don't have commissions in the futures market, right?
Oh yeah, there's commissions.
So what's the difference then?
Between
like what's the difference between the trading futures market and CFDs?
So CFDs aren't legal in the US. That's the reason why.
Okay, that's a big difference.
Yeah, big difference. They're not regulated, and so that is why I used to be used to be able to trade with the 5ers, and now I'm not. So for me, that was what caused the move to futures. I had never traded futures before, and I was trading with the 5ers, but then and it wasn't related to the 5ers. The change was related to meta quotes, MT5, MT4. When they no longer allowed US traders to use their product for trading CFDs, futures was the alternative. So the products are very similar. It's just, what your country allows, and there's not much we could do about it here. I tried for a long time to hang on, but it just wasn't it didn't get resolved. It didn't look like it was going to get resolved. It was very kind of uncertain what was going to happen. So, maybe in the future, the 5ers will offer futures. I don't know if you know anything about that, but
I don't think we don't really have any plans to offer futures, but I'm hoping that the legal landscape becomes clearer, and the regulatory, we have a clear regulatory framework to accept US customers. Because I think one of the reasons we're not accepting US customers today is because the regulatory framework is just not very clear, and obviously no one wants to be in any troubles.
Right.
It's not illegal, but it's just that we have to think about the future regulation of the industry. But we are we have a big team that is working with regulators, and we have very good contact with some of the bigger players in the industry. So if there's going to be any clear regulatory framework, and I'm pretty sure that the 5ers will be working on that with them.
Yeah, and it's only been a year. It feels like forever in trading terms, but this just happened basically, exactly a year ago. I switched to futures, I think mid-February or something like that. And it was just because, it got difficult in the space. So things will change.
Good for the future firms, though. I'm sure that the futures prop firms in America, that did see a huge upswing in customers during that period.
I'm sure, and Rafiki saying, I'm American and went to futures. Also, a lot of Americans switched to futures because it wasn't really much of a choice. There wasn't anything you could do about it at a certain point. And, so it is funny though, how that changes. Because I do remember before I thought futures were super, super complicated. When you have your broker, you can apply to have like a stock market account, but it's like an extra step an extra layer you have to go through in order to get futures approved in your account. And they have always said, futures are super risky. They're really complex. I thought it was a lot more like options, and it turns out
it's just the same.
Yeah, it's very similar. There are some minor differences, like needing to know what month, what contract that you're trading, but it's not anything like options. It's much easier than trading.
Yeah, options is complicated.
So complicated.
Options is very complicated. But yeah. I know Dirk. We have Dirk on here in the morning Monday live streams, and he's he's trading options for a living, and there seems to be so many different strategies, not in terms of price action strategies, but like having different options and like still being able to make money on a trade that would have been a losing trade. Like it's interesting, definitely, very very interesting. Mm-hmm. Then also you have don't you have perpetual futures contracts as well that automatically rolls over?
So on TradingView, yes, there is. There are those, and when I trade, like my personal account, and I trade it through TradingView, I'm on the perpetual chart basically, but it's not always like that. So I think futures platforms always roll for you, I think, for the most part. But that's when I'm trading on TradingView to my personal trading account on a broker. I never trade on their actual platform just because it's not very good. And so I'm not sure if you're on their actual platform, if you have to put in the actual contract or if it just rolls for you.
Right.
So there is such a thing, but it's not always. I'm not really super sure. I just know how my broker works.
Yeah, and that's all you really have to know. Okay, so first trade on the hypergrowth was a success. So we're up 0.25% on that one, and now I'm back on the 10K evaluation because I'm not going to be trading the hypergrowth account more than one trade a day, and it's only going to be this that you're that you saw on the screen on TradingView. It's just going to be one trade a day based on the first 15-minute candle on the New York Open. And like I did some calculations, and worst case scenario, it's going to take me 400 days to scale the account, which is not what I'm looking for. Mm-hmm. So I need to lower that. Now, I would be okay with making like 10%. I would actually be okay with making 10% a year, because then I'm able to automate this, and I would be running an account that I'm not even going to be touching. And then after, if I can do it in 3 months, then it's going to take me like 2 years to have like $500,000 on that account, and then it's just going to get to 4 million quite easily in like a year or two. But what I'm thinking is I want to push it to the limit when it comes to the drawdown. Right now, the drawdown is 9R max drawdown, which the max loss on the hypergrowth is -6%, which means that I'm not able to risk 1%, and I might not even be able to risk 0.5% per trade. So I got to stick with 0.25% per trade, and then it's gonna take quite a long time to get to that profit target. So I'm trying to see how I can eliminate the losses basically. And here's not yesterday, but on Friday, and that was a wonderful example of this. So you have that 50-minute candle close. Now imagine if I would be able to just have an algorithm that would tell that I would tell it to just close the trade, like just close the trade whenever it's the end of the New York session. I mean, I would be able to get a trade like this. But it's
Did I hear $4 million under
Yeah.
management? $4 million?
I'm dreaming, dude. Like I'm dreaming. It's a daydreaming.
Hi,
Look at this,
Deanna.
man. Look
How
at
are you
this.
doing?
This is the first trade on the account, Victor. The winner.
Congratulations! It's a nice start.
Yep.
It's the best way to start, right? With a winner.
Right. And it
Especially
seems
if you're
like that doesn't
experienced.
happen.
Yeah, but if you're an experienced trader, then you want to have your first trade as a winner. But if you're not an experienced trader, then that might be, you might become overconfident. That's what I've seen. Like when I started trading with an elevation account, I had like I started with a winning streak, and then I'm like, yeah, anything's possible now, you know.
We always have to kind of keep ourselves in check that way, right? Because you can spiral if your first trade is a loss. You can spiral, and you can get, like you said, too confident if you're thinking your first win means something. It's your series of wins, not just the one. But it's so easy to lose sight of that.
Definitely. All right, I got a meeting coming up, so I gotta jump off and take care of that meeting. I'm sure that Victor is gonna take good care of the audience as well as Deanna, and I'll be catching you all tomorrow, and then Deanna will be catching you next week, or we're gonna talk about potentially a new schedule as well. So maybe, we'll talk. better talk about that after the live stream, perhaps.
Well, I hope you can sleep and not dream about your strategy and just like rest now.
That's difficult. Because when it feels like I have a treasure. I'm on a treasure hunt, and I got this map, and it's like finding the clues here.
Yeah. When you get a new idea and you're just excited about it, it's like Christmas for traders.
All right, guys. I'll be back tomorrow. Maybe I'll pop in later if I'm done with that meeting in time. But I would like to thank everyone for watching today and helping me out with choosing the direction on gold and everything. It's pretty cool. We have almost 9,000 views on this live stream already, so it's quite obvious that you guys like what we're doing here. We have 300 people watching right now and almost 9,000 views, so it's quite incredible to see the growth that has happened this month for the live training room. Very, very excited about that, and very excited about what we have coming up in the future as well. Okay, that's it. I'll let you guys take over. All right,
enjoy your unwrapping of the Christmas gifts. See you tomorrow.
Yeah. All right, take care.
Bye. How are you doing, Deanna?
I'm doing well.
There have been people in the audience before you came on. They were asking, where is Deanna? We want Dr. Cole, Dr. Cole.
Oh, that's so sweet. Thank you.
Yes.
Thank you for telling me.
Yes,
I might be kind of at a weird point for some people because we've had a time change. You haven't had a time change, and right? You still have one more week?
Yes, 1 week more to go, and then we'll sync. We'll be in sync.
Perfect.
But it hasn't happened yet.
It hasn't. So you have one more week, and then you have daylight savings. Now, what do you think about daylight savings? Do they like that where you are? Young parents hate it, or parents with young kids hate daylight savings in the US.
It's I know it's from people I talk to, it's a little bit of a nag, to be honest, because you have to adapt to it, and before you know it, it's that time, and of course you get accustomed to it. It's every year. It's almost like a ritual, but it's a hassle. It's unnecessary hassle. Why do we complicate our lives, right?
Absolutely.
We just choose one side and pick your side and stick to it.
Yeah. My son told me, he said, well, the reason they're saying it's still necessary is because otherwise at 9 a.m. on Christmas morning, it would be dark out. I don't know if that's true, but who the heck cares? We'd be fine if it was still dark out at 9 a.m.
Yeah, I think if I'm not mistaken, one of the times it was introduced was when there was the oil crisis, when energy was way out of line, but that's changed now, and it's so ingrained in everybody's life and society. We should be able to take out anything that is excess, and that's one of those things. It's inefficiency, in my opinion.
Yeah. I thought it was because of farmers. It was helpful to the farmers.
Maybe
I don't know. That's what I always heard. But either way, it is not good. There's one state in the U.S. that doesn't participate.
Which one is it?
If I'm not mistaken, Arizona just says we're not dealing with that nonsense. We're not participating, and they keep their time constant. I think that's still the case.
So if you cross a line, it's a certain hour. You cross a line a step further, it's another hour.
That's how it is all across the U.S. So all across the U.S., if I'm in the East Coast, but when I go to Florida, you're in Central Time Zone. So the hour changes, your cell phone will click over and update. And so I suppose the same thing happens in Arizona.
For sure. We see someone is saying we have audio latency. Could everyone, not everyone, but a couple of more people in the audience tell us if there's any issue with our audio? Maybe latency? Is there a delay in when you see my mouth move, right? And the sound that I get? Is there a latency? Do you see a delay? Anyone watching? Let us know if that's the case. But we have some. What have you guys been doing while I was away? I think I saw Jonatan taking a very nice profit on his brand new hypergrowth account on the NASDAQ. But what else have you guys been looking?
He's been trading the NASDAQ. I've been trading the S&P, although right now price is just kind of doing a whole lot of nothing. So just, waiting to see if we're going to get any further follow through. There's been a pretty big move already since the open. On the S&P, price has already moved around 21, 22 points or so. And same thing on the NASDAQ, but it is just kind of sitting around right now. So for me, I'm really looking at ADX as a way to gauge when price is starting to move again. And right now at the two, I don't use time frames on this, but I use range bar charts. And on the two ranges, I look at 8R and 16R. On the 8R, ADX is only 14, but it's 30 on the S&P for the 16 range. So price is just kind of, hanging out, moving back towards the moving average. And then I'm also watching gold. I haven't taken a trade. I have a longer term trade that I took on gold. But really gold isn't doing a whole lot right now. Which, isn't that uncommon for gold, but again, the ADX is quite low on gold as well. So I like gold for a small long position to see if now that we've come off the all-time highs, pulled back a little bit, if this is, an area where price might want to take a little breather and then continue on from, but I wouldn't be interested in risking a whole lot on that trade. It's just kind of a bit of a flyer on that one. So mainly, yep, go ahead.
No, I was going to say, maybe we can add your screen as you're explaining gold and your thoughts. Shall I put your screen on?
So my screen is where I have a little bit of technical issues today. So I have two laptops that I'm working on, and the one that I have connected to the stream is delayed data. So it might be better to keep it on yours, and we can talk through it. But but maybe just leave it where it is on yours right now. So if you're looking at the daily chart, gold has made this really nice all-time high. I think it was Thursday of last week. But after hitting that all-time high, it kind of like pushed up pretty strongly on the daily chart. There are the 3 candles up and then kind of a pause, 2 candles up and then kind of a pause, and then it started to print red candles. And so price is kind of at a point right now where it has pulled back slightly, and maybe it's just taking a breather. But we're extended from the moving averages as well. So it's not an area where I would want to necessarily be super aggressive. So mainly I'm looking at the S&P today, and you can see my chart there if you want to pop over to my chart on the daily. And this is what we were talking about earlier. So looking at the daily time frame of the S&P, we had been in a super long-term uptrend. And then we kind of had this action here where, all-time highs kind of dipped below the 50 moving average, tried for all-time highs again, but couldn't quite get up there, tried a third time, couldn't get up there, and then took a really big spill. It looks really nasty, and it is nasty. It's like 10 to 11%. But if you look back even further to like COVID, for example, or different, even the last couple of years, there was a 25% correction that lasted. I think it was almost 2 years that took to get back to the all-time highs. And so it looks really nasty, and it was definitely a nasty move below the moving averages, but again, only 10 to 11%. But now, as we got down to the bottom here, price kind of stabilized, started to print some green candles. And then all of last week was FOMC week. So we had FOMC Wednesday afternoon. And all last week, price just kind of consolidated. So if you had a hard week last week, that might be why, if you were trading the S&P. And if we look at the weekly, we can see it even clearer. So we're below this moving average, a bunch of nasty, down candles. So really good momentum to the downside if you were playing the short side. And then last week was an inside candle. So the low and the high of this candle is contained in the low and the high of this candle. So, just kind of stuck in this range. And now we've broken out, prices broken out over last week's high on the weekly candle, and you can see it even clearer on the daily candle. Not only did it break above last week's highs and continue so far, but overnight there was, a pretty nice gap higher. So price closed last week kind of an indecision candle here. Okay, not so much an indecision candle, but a doji here, and then indecision week, and then now price has gapped up and then pushed pretty strongly higher. So what do you yeah, go ahead.
Yeah, S&P only 10%. The thing is, everyone who is long-term invested, it doesn't feel it's not comfortable. If you're you see your portfolio drop with over 10%, and you may even get some alerts from your broker telling you, this asset has dropped 10%, maybe you should look at it.
Yeah.
But that's the moment. I mean, if you're buy and hold in any case, or in your passive investment, you shouldn't, that shouldn't be the moment you're making up the plan. The plan should be already done. You're gonna hold this for a certain time. And drawdowns are the worst moments to get out, right? That's when, with retailers, mom and pop, it typically freak out, and the worst moment to get out of the market on the equities is when you had such a drop. Right. You want to be getting out in strength, not when it's dropping as an elevator, and if not a brick falling from the sky.
Right.
So go ahead.
I'm just agreeing with you. Absolutely.
Yeah. So do you think this is everything? Do you have any? What does your analysis tell you about the equities? Do you have any ideas if this is, is it likely to be the bottom? Are we in for another leg down in a couple of months? Do we even know that?
Well, for me, I'm not interested in predicting. There are some reasons why you could make a case that it's not over. To me, I just would say I don't really know. I don't think anybody knows, and it doesn't matter because that doesn't really impact my trading. So for me, today, what's happening is the market is moving higher, so I'm interested in being long. Here, the market is moving lower. Is it going to be a crash? I have no idea. Is it going to continue lower? I don't know. Right now, if you're looking at kind of what happened with the market, this is a really strong break to the downside. So a lot of downside momentum here. We're below a bunch of important moving averages. This is, a pretty nasty, pretty gnarly move to the downside, even though it's only, 10 to 11%. So when people are starting to call it, a bear market or a crash or something like that, it's not that yet in terms of, what has happened so far. For me, though, this is definitely a good place to consider looking for a move higher. So, definitely a lot of momentum to the downside here, a little bit of indication that maybe there's going to be a little relief. No idea how long that's going to be. But then it lasted the whole week. So there was this sideways consolidation the whole week and now a break higher. So that doesn't mean that price is necessarily going to go to all-time highs, but it does mean for me, I want to be looking for longs right now until some sign of the party's over. So as we get closer to the moving average, I'll want to see how price is reacting there. As we start to hit different markers, I want to see how price responds. For example, I wanted to see what it looked like if price could get over this daily swing high here. If I take this off, you can see a little bit better here. This is a daily swing high. So the high here is higher than the high on either side. So a daily swing high, it broke that high. And then sometimes we'll see it pop up and then continue lower. And so far, price is moving higher. So right now, there's a lot of strength to the upside. Doesn't mean it'll continue forever. Doesn't mean that this is necessarily the bottom. But right now, the direction I want to be is long.
I agree with you. Yeah, if I were to, with your permission, show my screen, what I see is we have. Yes, I see the same thing as everyone else. We did came all the way down to the monthly order block. We squeezed it the way we went so much lower than that demand area. To me, is a sign of weakness. That's a clear sign of weakness. We're very weak equities, but then again, I mean, look at what the equities has done in the last couple of months. This is just healthy market movement. This is a healthy correction in my book. Just looking at these the leg we have had. So, but in any case, price action is weak. That's a fact. It hasn't closed, at least at the end of the month. We'll see. So far, it doesn't seem to wanting to close below it. But the fact that we had that wick down tells me that that opens the door for more weakness. This structure apparently was this area was unable to push price and prevent it from going lower. So that opens the door for lower prices. And if I go to the weekly, we did have a order block that was, I left it on, that was invalidated. And below that order block, we don't have anything on the weekly, right? All the way perhaps to some order blocks that has already been retested before or mitigated before. So basically the door for lower prices is open. However, what we see is we can go to the daily, as we have broken those structure, that weekly order block, that's why I left it. You can see how it went through it, giving us that sign that it may be getting ready to go much lower. But what does price action tell us? We create a bullish order block, we create another one, we retest it, we move out. That's bullish order flow. So it makes sense to me that price wants to go higher. How much higher is difficult to say. But what I do see that we do have an entry order block, or an order block in in general, which is there is a quasi here. This is the daily quasi neckline. That will be the head, left shoulder, and then we have three order blocks that could be where sellers might come back to the market. If it were to happen, this order block is not visible on all price feeds, so I don't use it in my analysis. I only use those that are visible on all price feeds, because I want to be trading something that is visible to everyone, not just a fraction of the market. So I don't use that. But we have three order blocks, which are areas where I would be interesting to see if we can get a reversal from, right? If we can get a reversal from any of these areas, then I would be looking for that short again, if it were to present itself. But we don't know yet. And the equities, of course, let's not forget, the equities has historically always had a positive drift. In the end, it ends up going higher and higher because of inflation and because of how the indices, the S&P works, where they select the best companies, and those that are not performing as well will get eliminated from the index. So automatically, we should be on longer terms biased for that, knowing that price is going to take out. It's not going to continue to go lower by a lot. However, we also know that fundamentally that the equities market has a discounting mechanism, right, into around 6 months in advance. So the question is, what is the expectation of the market? Do we see this? There's some risk for recession. Some Goldman Sachs, I think they are reassessing, the risk. They're upping their risk, their expectation of what the chances are that there's going to be a recession in the U.S. That's going to hit, of course. You're going to see that reflected in the S&P. So the question is, there's a lot of uncertainties with all those layoffs, governmental layoffs. Even though we talked about this a couple of weeks ago, even though the government isn't the biggest part of the economy, there is that knock-on effect, right? All the contractors that work for those programs or projects. So it will have some kind of effect, and I think that's what we're seeing. That's part of what we're seeing, and as long as we have that uncertainty, we will see some weaknesses. Maybe I have no idea either. Of course not. As a price action trader, I have no idea what's going to happen. The only thing we can read is what price is telling us now and has done in the past, and we can have an idea, okay, where is it likely to have some reaction if it's going to follow a certain scenario. And that's it. That's the only thing. It's only probability. So what I will be looking for is that we see in these areas, if price that's going to coming up likely. We do have an order block before that, but it's below the 50% retracement. It's likely that it's going to reach that 50% retracement on that leg down, and from the 50 it may start slowing down, and we'll see if it's enough. I would say if we zoom out, even if it goes lower, it's very healthy correction still. It's by no means I think anything to throw in the towel. All right, so that's the equities. What can we say about gold? Have you guys been looking at gold? I think you talked about gold, right? Because I think you just did.
Yeah. And sorry, to your point too, it's like we don't need to know what's going to happen in the big macro environment. We can just trade what we see, and so it's a lot easier. Like we can simplify what's going to happen just act on, you can always have your theories about where price is going, but really you only need to worry about what price is doing and how you can enter in a way that is probabilistic to capitalize on it right now. And, it's fun to think about what, make predictions about what might happen longer term. But the reality is we only have part of the information right now. So if you are able to predict where price is going, 5-6 months from now, there's a lot of luck to that because there's a lot that's still unknown. A lot of things can happen. But again, as traders, we really don't need to know long-term where price is going.
Totally. I couldn't have said it better myself, Deanna. It actually fundamental. Everything I just said about the government layoffs, it has nothing to do with my trading.
Right.
I don't base any decision on all those, arguments that may or may not be supporting another leg. Mm-hmm. Of course, we as human minds. I don't know if you're a psychologist, Deanna Cole. I don't know that. Are you? The human mind looks for patterns, and I'm just kidding. I'm just pulling your leg. So fundamental has nothing to do with my strategy, mm-hmm. And actually, I think it's the best thing. I don't have to read anything. Mm-hmm. As a trader, price action, the only thing we need to know is when those high impact news come out, of course. But that's it. After that, you can just trade price action, and it will tell you basically everything you need. Right. There's no need to predict. It's not about predicting in any case. You can project certain moves based on probabilities, but that's not predicting. That's just, projecting what it has done in the past. You project it to what is likely to happen to some degree in the future. And I think that's the best way and the only way to trade. It's not about being right or being wrong. It's about knowing when to enter, where is it likely to turn or continue, and define when is your setup invalidated, where do you need to take the loss, and what is reasonable to expect from that move to get out at a favorable area. That's what it is about, not about knowing in advance what's going to happen, because in the end nobody ever knows.
Right. I saw an interview this weekend from Linda Ratchke. If you haven't seen it, it's on her Twitter, and it's mm-hmm. excellent. She is a super, super impressive trader. You can look it up to find all her credentials, but she actually said that she doesn't use anything but technicals in her trading. And I was actually pretty surprised because she's brilliant. She follows all kinds of markets. She knows a lot about what's going on in the market. And so for her to say that, I thought that was really, really interesting, that she only relies on technicals. And she is somebody who looks specifically at patterns, not like cup with handle patterns, but specific patterns that she has identified throughout her trading career. And to me, the whole reason that you would use patterns or indicators or anything like that, they're not preventing you from ever losing, but they help increase consistency in your trading behavior. So in your behavior, how you enter and exit, the more you can increase the consistency in how you do that, the more you can learn from, I think last week we talked about the scientific method and holding certain variables constant. And it's a lot like that. If you're always changing how you enter, how you exit, there's so much variability. It's really hard to learn about your strategy because you're always changing things. And so consistency in itself is really, really important to help you kind of understand the potential of your strategy, and it can also boost your confidence too, because you have so many trades behind you that have been traded that same way.
Exactly.
There's a question in the chat. I have a question regarding trading psychology. How do you deal with hesitating on entering trades? For me, I think it really is important to, like I was saying, have that consistency. So there's nothing magic about indicators. There's nothing magic about patterns, but having something like that to help you know when you're being consistent and kind of allowing you to have like a green light a red light, green light, yellow light type scenario can be really helpful to help you feel confident that you know that the trade could go either way. It's not about being right or wrong. If you understand what's going on, any trade, as the most beautiful setup, can fail. All the reasons that you should have a trade go in your favor, and it still can go against you. And so for me, it's really important to manage my thoughts and my thinking as I'm entering a trade. So when I'm getting ready to click a button, just reminding myself all trades can fail, I'm risking appropriately, and this is just part of trading. Having sort of a mantra that you go through, and even practicing relaxation in the moment. So you don't have to do anything special, but just paying attention to your breathing, paying attention to your body posture. All of those things can help improve your confidence. And on my YouTube channel, I have a ton of videos that talk about how you can use visualization, how you can use your body to improve your confidence. So if you're interested in learning more about that, my YouTube channel is Dr. Deanna Cole, and I'm on Twitter as well. But check out the YouTube videos and see if there's anything there that can help you, work through that. Visualization techniques, if you want to commit to that, it's more than some traders want to do, but that can be a really, really powerful tool as well. Great question.
Yes, indeed. And that goes for everyone. If you guys have, this is the moment to ask all those good psychology or otherwise just trading questions to Dr. Deanna Cole. This is your opportunity. You have the chance once a week. It's a very precious moment. You can ask her question and get live answers right from her. We have a button on YouTube that is calling you. Everyone watching us, that button has a bell, right? Just click it. Don't worry what happens. Just click it. It has a bell. And there's another one. I think it has like a thumbs up, right? Just click it. Don't worry what happens. Just trust me. It's gonna be okay. All right. So let's see. We have in the chat. I was looking into gold because Mike was short, if I'm not mistaken, gold. So I'm sure he's very happy now with his trade setup working, as expected. I'm gonna break down gold in the meantime. Let's see if I can. So on the monthly time frame, there's nothing to see. So we move on quickly to the weekly. There's only bullishness. And the weekly time frame, it broke that bearish order block. That tells us that still on the higher time frame, it's very, very bullish. And all these can be eliminated. Other than that, there isn't anything. There isn't a quasi, right? There isn't enough candles to watch to see a candle, or a quasi, and there isn't a fresh order block either. So there's nothing to do even on the weekly. On the daily time frame, same thing, right? We had a reversal, which eventually broke, and here, this is just a nice V-shaped recovery, and there's nothing I can do with this in terms of a daily time frame. This is just a nice V-shaped recovery. There's no order, no structures being created on either side. So the 4 hour is the first structure or first time frame that we have that we could see some. We can say something about it. In my way of dealing, or not dealing with, organizing price action, this is not a quasi. Okay, you may not agree with me. You might say this is the head, that is the left shoulder, and if you think that's right, that's fine. But I don't consider this to be a left shoulder. To me, a left shoulder is created when we have significant selling in case of a bearish order block, bearish quasi, a significant selling before it creates that high, right? What I mean is this I need to see that selling coming in before the head being created, right? A good left shoulder has convincing selling pressure to it, and I don't see that here. I don't see where you do have a bearish order block, but it's almost immediately, not almost immediately thereafter, it's been negated. So I don't see any, there's another bearish order block here, but immediately negated. To me, this is not a left shoulder. This is not the correct one. So I'm not going to consider this an H4 quasi, right? Meaning that on the H4, remember the monthly, there's nothing to see. The weekly, there was no structure. The daily, there was nothing to look at. And even the H4, there's no structural break in gold. That tells you that whatever short you're going to be taking, you better know, where to get out, because market is not giving us any hints that, it's not breaking any structure, telling us that this could go much lower. The only thing you do have, though, is the order flow, right? The balance of power expressed by which side is creating and breaking the structures. And what we have been seeing since that high has been put in is the creation of bearish structures that have been left intact so far. So we have that tells us who is in charge, and it's not a coincidence that price comes back to that last one and moves away from it, right? Because that's within the same direction as the order flow. So that's the only thing I have. So basically, I would be looking, not today anymore, because this is the order block that you could expect price to go to reverse from. You would then go to the lower time frame and try to find that reversal pattern. There is a quasi at play, but the impulse is quite strong that I don't think it's going to come back in time for today to get a reversal from it. It doesn't seem like it's going to do it. By the time it reverses, it will be at the end of the day, and it's probably not going to be a retracement deep enough for me in any case to get a signal. I don't think so. And even if we did get a signal, I don't see any reversal entry order block on the quasi. So there's nothing for me, and no signal in my case. But based on the order flow, I would be looking for shorts, if anything. I don't see a reason other than that, because there's no quasi and there's no structural. There's nothing basically on the H4 or the daily or the weekly. Just pure bullishness and some retracement. So that's on gold. We did get gold. There it is. Yes. Mike is getting the cheese. Not sure what cheese it is, but I suppose the reward.
Yeah, I think making the money.
Making the money, yeah. Would it be old cheese or?
I hope not.
Sure. All right, let's see.
There's a good question for you, Victor. What is a quasi?
Yes, a quasi. I get asked that all the time. I'll say it very quickly. Quasi is a.
Can I interrupt for just a second? This comes from Quasimodo. So, Quasimodo, the cartoon where the shoulder, he's kind of like a strange creature. And so, if you're wondering where that term comes from, that's what it refers to. But it's more complex than that. So,
rightfully so. Yes, that is exactly what I'm referring to when I talk about quasi. Quasi is short for Quasimodo, which is that creature or that fictional character.
Yeah.
Let's keep it to that fictional character that is not exactly symmetrical, right? And it's a reversal pattern on it's a head and shoulder, and it's a variant of the head and shoulder. This is the typical textbook form of the head and shoulder, and the quasi is nothing different than it being very asymmetrical. It could be something like this. It could be where you don't see symmetry in the left and the right shoulder, or perhaps it could be even much more pronounced, which it moves being something like this, and to me it would still be a head and shoulder. A quasi, not a head and shoulder. And that's it. It's a variant. It's an asymmetrical head and shoulder. That's what it is. And head and shoulder being a reversal pattern. And I call it, it's not, I didn't coin it. It's called Quasimodo, and it's of course this guy.
Did you put a picture? I missed it. Yeah, there you go.
Anyways, so that's gold. And it's been falling quite hard. And you could have seen that by the previous legs, right? The picking up the legs, the bearish legs has been, picking up steam. So it was kind of clear, good reading from Mike as well to see that, it would have been a nice sell. Let's look at euro dollar. There's someone here says, oh, I see. I call that as a complementary head and shoulder. Yes, you can have all kinds of, terms. And what's important is that you understand the pattern, whatever name you call it, and you have a consistent way to approach it. And you gather data on the pattern that you're trading. Meaning, when is the optimal place to get in? When is it a valid one? When does it invalidate? And so on. That's the important the important of it. How you call it necessarily is the least of your is the least of your issues. All right. So that's Quasimodo. All right. So
it's fun to say. It's a little bit more fun to say than complementary head and shoulders. It's a mouthful.
Yeah, and it's an invitation for people to ask what's a quasi, right? Because it sounds a little different. So that's a good thing. All right, let's look at EU. Or if you have any questions, guys and ladies in the audience, if you have any questions, if you have any requests, let us know. You still have about 20 minutes or a little bit less than that. That's what we still have for our stream today. Hit the like button, subscribe to our channel if you enjoy our stream, and if you want us to keep on providing you with analysis, conversation, knowledge, experience, and everything in between. Clown costumes, a little bit of entertainment as well, just to keep things fresh and fun. All right, let's look at EU. I'm gonna do it very quickly on the daily time frame. We don't have much to work with. We do have a order block above us, which we're not there, so there's nothing to do on the weekly time frame. There is a quasi at play on this in this area, but this is the only area on the monthly that makes sense. We're far from it, so don't worry about it. On the weekly time frame, we are currently in a entry order block on the quasi, right? The quasi being this being the Quasimodo, our good friend from Notre Dame. There, right? That's the left shoulder, the head, and it's coming back to a specific area, one or two areas that they are where it could possibly make that turn. Now, what's interesting and why am I showing this being the weekly time frame? It is because we did get a bearish engulfing, meaning at least for these two, considering these two candles, the sellers took control. Does that mean the price is going to reverse all the way down? No, not necessarily. But that's the first sign of sellers coming to the market. And depending on how this could be, for example, this could be a left shoulder on the lower time frame. It might go and retest this high and make a higher high, but now it's as the sellers are coming in, we might get some reading if this is going to be a reversal or not. So that's the first sign. We could be, this is the weekly, so there's plenty of time to trade this. You could be trading the retest, which this is the immediate retest. Let me show you. This is the immediate retest, but it hasn't left the order block yet. So after it leaves the order block, comes back, that's the first retest. And we could see potentially a retest of price going a little bit lower, and who knows, depending on price action, it could be much more than that. So we did get a bearish fresh weekly order block. That's promising. But however, when we go to the lower time frames, I don't see the quasi, right? So there is no structural break. This is not a structural break to me. Look at, right? Remember what I just talked about the quasi? I want to see after the assumed left shoulder, I want to see heavy selling. I don't see the heavy selling here. So it's not a left shoulder to me. So that means that there's no structural break, even though it's a swing point. Yes, it's a swing point, but it's not the one that the good quasis throw at us, show us when it forms those good quasis to trade from. So I'm not going to be considering this a reversal pattern. But that means that I'm not going to be doing anything with the weekly, because if I don't have the daily, then I have nothing to do with the weekly. The daily, if I don't have the daily, I'm not going to do anything with the weekly. I need that alignment. And if we keep on going lower, the H4, of course, the more you go lower, you will see those reversal patterns. And we did get one, which is this. So I'm going to be waiting if and when price comes back for perhaps an order block within this order block, within the daily order, an entry order block on the quasi. Within that order block, we have higher, and perhaps an entry here as well, which is 032, close 033. No, that's not an order block. So this is the only one we have. If it comes back, that's the only place I'm gonna be as a short. I'm gonna be interesting. However, we haven't, even though we did reach target. This was a TP we had from before, and we did reach it. We haven't tapped into that daily order block yet. See that below us? We haven't tapped into it. Even if it's by a little, we haven't tapped into it. So I still expect price to, push at least, maybe not today, maybe today, I don't know. Maybe later, maybe do something like that. Who knows? But I still expect this structure to be tapped into before we get to that intersection in price action where it decides, does it want to reverse, does it want to continue going lower, right? To me, it needs to reach these intersections, if you will, those stop lights, before it decides what to do. So far, it is on its way to that structure, and that's where we can expect it to most likely go to. It's almost there already. Other than that, there isn't a lot. There was a fresh order block here, but we didn't see any reversal on the lower time frame. If anything, price accelerated to the downside, right? So as this closes in about 2 hours, we can assess if it's been negated or canceled or not, invalidated. So I don't have anything on EU either. I'm gonna be waiting for price to come in, but look, it's not a fresh order block on the daily. So it's not, I know it's going to be a target, but it's not something that I can use on the daily time frame to look for a long. It is a demand area, but it's not enough for me. It's not selective. It's not good enough for me. So I don't have any trades on, or any setups, possible setups on the on EU. Let's see.
Sorry, Victor, to interrupt. Fabian's asking if you could explain what an order block is.
Sure. Well, there are different definitions for order blocks, and they're good. I don't say they're not, and who am I to say they're not valid and mine is the correct one? However, what I like to have in my trading is objectivity. And the more objective a definition is, the less it depends on the person who, the interpreter, the better it is. And that's why I make my order blocks as simple as possible. My grandmother could, identify the order blocks following my rules. That simple it is. So
your poor grandmother.
She is 92 years old, and I'm sure she can
That's
follow.
Fair then.
She's 92 years old, and she is able to follow my order blocks if I explain her my rules. So the order block, to keep it short, I use two candlestick combinations, two candlesticks, right? I'm consciously saying two twice. So it's a two candlestick combination, and we have two of them, right? So two candlestick combinations. One is the engulfing, very simple, and the other one is the outside bar. And I'm gonna say it very quickly before we're not doing like a webinar. Very, very simple. Whenever for an engulfing, you need, as I said, it's two candles. That's one. This is number two, and you need to change direction. That's one prerequisite. Right? It needs to have changed direction, and the second candle needs to have a bigger body than the first one. That's it. If you have those two, then you have an engulfing, right? Because automatically that means that actually the proper definition is that the close of bar number 2 needs to be above the open of bar number 1, right? But the body is visually, it's easier to identify. So that's one. And the other one is an outside bar. And an outside bar I define as following. Let's see if I can find one. Yeah, here we have an outside bar. And it's this candle. And in this case, let me mark this. That's bar number 1. And in this case, it's also an engulfing, as you can see, right? The body is bigger than the first. Bar number 2 is bigger than bar number 1, or the close on the second is higher than in a bullish engulfing as the open of bar number 1. However, you have the candle number 2 is actually taking out the range of candle number 1. That's one prerequisite. It takes out both sides of the range. See that? Let me open this up a little bit bigger so everyone can see it. That's the range of this bar. And bar number 2, as you can see, went below the low and above the high, and it closes either above or below that same range. And when it does that, that's an outside bar. And it's very, very powerful. Price, these two, this is the order block that's created by this structure. Price comes back to it and moves away from it, right? Even if it's at the top, you could see it could no longer go any higher. You will still see this reaction of the order block, right? Price comes back into it, moves out, and that's it. That's a simple, very, very simple. Just the retest of these order blocks defined as engulfing and outside bars. So those are the order blocks. The other definitions there you can find from Investopedia and some other, where limit orders are in the market. But as retailers, there's no way we can see the retail order. So that definition doesn't help us. And so on. There are different definitions, but I find this to be so simple, yet so powerful.
Very good. Thank you for sharing the explanation. And somebody's asking about your analysis, if it can be used for day trades or swing trading only. How do you use it, Victor? Personally, I use it for day trading, but the same techniques that I use can be applied to longer term holds as well. And so I will, in my personal account, have usually a shorter horizon, and then in other accounts, depending on what type of account it is, I might use the same thing for a longer hold time. And it just depends on what my goal is.
Yes, the short answer is that the market is fractal, meaning the same patterns we see on one time frame, those are the same patterns you will see on time frames higher and lower that one time frame you were looking at. So the same quasi, the same order blocks, the same everything happens on the daily, the weekly, the monthly, the 5 minutes. It doesn't really matter. There are nuances, of course, but it's the same thing. So if a tool, an indicator is useful in one time frame, it should be useful in other time frames as well. Because if it's interpreting, or if it's reflecting price action doesn't have a time frame, right? It's fractal. You zoom in, you see the same. You zoom out, you see the same patterns, as I said, building blocks, which, those engulfing, those pin bars, these double bottoms, they happen all the time in all time frames. So what I use is, I use the same concepts, quasis and order blocks. Those are the two tools that I use in my trading. And I start top-down analysis from the monthly, and I use that to my advantage. And if I only see a reason using those concepts on the monthly, I need to have some kind of alignment. If I only use one time frame, they will have a good probability, but not as great. But if you have multiple time frames in sync, telling you the same, that's the sweet spot. So you have to define for yourself how much alignment do you want. If I'm going to use the weekly, I need the daily to support that as well. If I'm going to be using the monthly, I need the weekly to support that, and so on. And for my daily trades, intraday trades, I start from the H4 and I go lower. If the H4 tells me something, then I can start looking. I get permission, if you will, to look for on the H1, H2. However, if the H4 isn't giving me anything, as you saw on the euro dollar, I have no reason to go to the lower time frames, because I need to be using H4, because I know in terms of intraday, that's one of those big time frames that is the most relevant for our trade. So I'm going to be using the biggest structure or biggest time frame relatively to the time frame that is the daily time frame if I'm intraday trader. So I use my analysis on all time frame, and if I get a signal on the weekly or the daily, it just means that I'm going to be holding it as a swing trade. That's what it means. If I get a trade on the lower time frames on the H1, it means that I'm going to be holding it for perhaps 5 candles, perhaps 6 candles. That's going to be an intraday trade, right? A day trade. So
that's an interesting way to do it, to determine the length of your hold based on this, what time frame the signal came from.
That's exactly what I do. I let the time frame, actually price action. I see it this way. The time frame, the frequency. If we compare the time frame as the frequency of the broadcasting being the narrative of the market. If it tells me any frequency higher, then that means something, right? If we get a daily signal, that means that the next couple of days, this has a chance to happen. And if I get it on the 30 minutes, it means the same thing, but for the 30 minutes, a next couple of hours, it has this probability of to do or to occur. So basically, it's the market decides, what I can reasonably expect from the market, right? By the time frame it presents us those patterns, and that's how I read price action.
Yeah, that's interesting. Well, we have to wrap it up. There's one more question I wanted to pop back to a little ways ago, asking about which indicators I use. I personally like the DXI and ADX. So DXI is really helpful for direction, so confirming direction, and ADX lets you know when movement is coming into the market, or like what we've had a lot this morning has just been kind of this sideways consolidation, or the market has been pushing higher, but then it's like slowly pulling back. And so ADX has been really low. That doesn't necessarily mean that you can't trade those times, but it just tells you that there's not a whole lot going on. So I'm not sure if it says, what do they stand for? Are you talking about the indicators? ADX is average directional index, and DXI is like directional index. You can find them on TradingView. They're pretty common tools. So, but I think we need to wrap it up. Victor, time to go for the day. Thank you so much, everyone, for joining us today. Great questions. Appreciate your comments and questions. It makes it so much fun to have you in the chat trading with us and sharing your trades, sharing your ideas. So thanks for being here. And Victor,
Deanna,
as always, great to have you with me this morning or afternoon, wherever you are.
It's my pleasure, Deanna. As always, I enjoy these moments with you. And of course, I enjoy all the interest from the audience, because this is what makes me excited, right?
Yeah.
Talking about my passion and sharing it with everyone who's interested. And keep those questions coming, but above all, keep hitting that like button, subscribe, make this channel bigger, even bigger. We're growing already very fast, but we can grow even more. So don't forget to click those buttons. We see you tomorrow. Bye-bye.
Have a great day, everyone.
Hi guys, so thank you very much for watching the video. Now make sure you like and subscribe, and most of all, go into the YouTube and check our other content that we provide here at The 5ers. We'll see you in the next one.